Good morning, everyone. I believe all of you had the breakfast. Then show some energy. Good morning. Good. His Highness Sheikh Mohammed bin Rashid Al Maktoum once said, "Failure is not falling to the ground. It is remaining there once you have fallen. And the greatest failure is when you decide not to stand up again." The quote of His Highness is very much relevant in turbulent times as well. We didn't have the same time in past as we are feeling today, and will not have it same in future as well. Upward trends towards globalization and ease of availability of everything on fingertips has made the buying easy to everyone. We name it and it is available on click of a button. I believe that there is no turbulent times. It is we who creates the turbulence in our life by overspending or without having a proper planning for our investments. Availability of credit also often has an advantage to spend on the purchases that are beyond our repayment capacity. We can overcome personal turbulence on account of expenses and investment. Either we can have a reactive approach to delaying the purchases till the time we have enough, or follow a more proactive approach for planning of our finances early so that we always have these readily available as and when a good deal comes our way. As an individual, handling diverse investments can be a difficult task, and it is essential to indoctrinate prudent habits when it comes to money matters. At times we thought that where does all our money go? At each month end, we feel the heat of shortage of funds, which shows that lack of planning for our own finances. But when we handle and plan it in a right way, our investments can help us enjoy a comfortable existence without any worry. Turbulence is something we talk about a lot, but we need to analyze how it impacts various sectors or various factors of our life. What's coming next, where we should be moving to, and how to keep our portfolio intact and spending on the right side of the curve. I believe that any kind of turbulence creates new desires and opportunities. Globalization is not new. It has expanded, or it is still expanding beyond boundaries with the more and more digitization. By familiarizing ourselves with the changes in technology, trends, habits, and many more such things, we help stem the illicit financial flows in disturbed or turbulent times. Here I would like to mention and thanks our chairman C. N. Rag Chaturvedi. You must have all observed that Dubai chapter also we have made most of the function digitized, be it payment, attendance, registration, or member communication. Almost everything is available on a click of a button. A big round of applause for our chairman, C. N. Rag Chaturvedi. In time of recession or during turbulent times, we generally have one common question. What is that? That since we have already planned everything well in shape, how this technology or turbulence will affect us. And to know more on how we can become our own financial advisors, today we all are here. Today we have with us our learned speakers to share their experience and expertise on emerging dynamics of technologies, payments, investment, and its importance in turbulent times. Before I go further into the substance, I would like to warmly welcome today's guest speaker, Mr. Mohit Eri, Mr. Manish Mathur, Mr. Viram Shah, and Ms. Deepika Sitlani. A big round of applause for all the speakers. Chapter Chairman Sri Anurag Chaturvedi, past chairman of the chapter, fellow friends, members, seniors in the profession, sponsors, and my colleagues in the managing committee, and eminent guests, a very warm good morning to all of you. On behalf of Dubai chapter, I, Manoj Agrawal, Secretary of the chapter, welcome each one of you to today's session on Sunday morning that you would like to know how to become your own financial advisors. I express my sincere gratitude to today's speakers for accepting our invitation. I also thank each one of you for your active participation. A big round of applause for speakers, sponsors, and all of us. While our speakers will take us through with many exciting topics, it is now time to pay our respect to our nations and profession. May I now request everyone to please rise for the UAE and Indian national anthems and the ICAI motto. Request our technical team to play.
भारत भाग्य विधाता। पंजाब सिंध गुजरात मराठा द्राविड उत्कल बंगा। विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा। तव शुभ नामे जागे तव शुभ आशीष मांगे। गाहे तव जय गाथा जन गण मंगलदायक। जय हे भारत भाग्य विधाता। जय हे जय हे जय हे जय 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 हे।
य एष सुप्तेषु जागृति। य एष सुप्तेषु जागृति। कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः। तदेव शुक्रं तदेव शुक्रदब्रह्मा तदब्रह्मा। तदेवामृतमुच्यते। तस्मिन् लोकः शितः सर्वे तदूनात्यपि कश्चन। एतद्वैता 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 एतद्वैता।
Thank you very much. Please take your seat. As we all know, in November this year, ICI India is hosting prestigious World Congress of Accountants 2022 in Mumbai. May I request our technical team to play the video of World Congress of Accountants?
Geographically, the 7th largest country in the world, one of the oldest civilization, world's 6th largest economy, a global hub for innovation with one of the largest startup ecosystem. India, city of Mumbai on the western coast of Arabian Sea, among the most advanced and modern metropolises in the world, and the financial capital of India, gears up to host the most prestigious accountancy event of the world, 21st World Congress of Accountants from 18th to 21st November 2022, an event held every 4 years. The Olympic of Accountancy profession. India hosts the event for the first time in 118 years since the WCOA came into being in 1904. Around 10,000 delegates expected to join virtually. More than 6,000 delegates from over 135 countries would congregate to exchange views at the world's most advanced Geo World Convention Center. The theme, Building Trust, Enabling Sustainability, will inspire the future of accountancy profession to create sustainable economies for the future.
The ICI is honored to be the host for this mega event, which will bring together the world's largest conglomeration of professional accountants, regulators, leaders, and visionaries to advance the cause of the global accountancy profession. Now, with the ease of travel restrictions across the world and the situation returning to normal, we are working towards creating a never before and a unique experience for all our delegates. The year 2022 marks the 75th year of India's independence, and the Government of India is celebrating the year in a big way to showcase the glorious history of India. World Congress of Accountants 2022 would also be celebrated as a mega event to showcase the important role that the accountancy profession has been playing in the economic and social development of the country.
A never before witnessed unique experience of learning future trends, emerging avenues, enhancing skill sets, networking, and to explore the incredible India awaits you.
We at ICAI are pleased to host you here in Mumbai, the financial capital of India, for the 21st World Congress of Accountants with the theme Building Trust, Enabling Sustainability from November 18 to 21, 2022, and give you a professionally enriching and personally rejuvenating experience. We are hopeful that the conference shall be stimulating and productive, and your stay in India will be a memorable experience. Once again, we invite you for this enthralling convergence in India, the land of multicultural, historical, and spiritual inheritance since centuries.
Insights from the stalwarts of the profession, international and national standard setters, regulators, and trendsetters will constitute the panel of speakers at WCOA 2022. Let your dream get bigger. Come, be a part of this mega celebration. For registration and sponsorship opportunities, contact. Organized by Institute of Chartered Accountants of India under the aegis of IFAC.
Thank you. The World Congress of Accountants 2022 would be an apt platform for exchanging ideas through interactive discussion for accounting, finance, and business professions. Let us plan to visit in November and register now to witness the most significant conference in the accounting world. Something we know unique about our chairman, with due respect to all past chairmen, he is more innovative, always brings new idea. So he always brings unique, or I can say innovative ideas to enhance members' experience. And in continuation to the same, he came up with another innovative idea to encourage more members' participation in World Congress of Accountants. The idea is that members who will register today for World Congress of Accountants for virtual mode, ICAI chapter will reimburse 50% of their registration fees on the spot. So big round of applause for this innovative idea. So you registered today, and before leaving, you can catch hold our treasurer C. Jayaprakash for refund of 50% of your virtual fees. So thank you, Chairman. Let us have a big round of applause for C. N. Rao Chaturvedi. It is always essential to recognize the ones who always supports us. Let us recognize our sponsors. Thanks to our title sponsor, Saudi German Health, principal sponsors, Pan Emirates Home Furnishing, AGMC, Tele, Lulu, and IFCO, platinum sponsors, Emirates Chartered Accountants Group, WMS, Cloud Soup, UHY James, and Vested. FMCG partner, Aktia, media partner, Khaleej Times, institutional partner, Delhi Private School, banking partner, Bank of Baroda, and event partner, HSBC. And today you must have seen that we have Citibank team here, and members can reach out to them for exciting offers on credit cards. Citi is providing a sign-up gift of Bluetooth speaker on each file completed at their stand today. Their wealth team is also present at the stand, and you can discuss your business or wealth requirements. I hope all are you wealthy. So your requirements, you can discuss with them. Let us appreciate our sponsors with a big round of applause. For sponsors, you need to clap. These events are possible because of their support. Thank you. Ladies and gentlemen, I am sure that today we will gain a unique experience by enhancing our knowledge on how to manage our expenses, how to secure our investments, and acquire advantage of digitization in turbulent time. This should sharpen our skill to become our own financial consultants. With growing digitization, we can perceive that automation is one of the key and powerful forces for changes in B2C payments. During the pandemic, we have witnessed enormous adoption of real-time contactless payment system around the globe. As we all know, business banking is not the same as consumer banking or consumer payments. For a business, there are many functions or departments engaged in one single payment processing, which become much more complex for the diversified business groups with strict processes and controls in place. To make us understand and to let us know how businesses are adapting to the evolving B2B payment ecosystem, Today we have with us our guest speaker, Ms. Deepika Sitlani. And to introduce Ms. Deepika, I would like to invite our executive committee member, C. Rishi Chawla, to the stage. A big round of applause. वो कहता है जब तक नहीं बजाओगे नहीं आऊँगा.
Good morning, members. As we have always read in the case of financial advice is that most of the time, nobody planned to fail. But what happens is we fail to plan. So for that, this is such an apt moment which has been created. And thank you, Chairman Sir, for bringing this particular topic. So without taking much time, I'd like to introduce our speaker for today, Deepika Sitlani. Deepika Sitlani is manager and product and solutions with Mastercard. She's responsible for all of Mastercard's products and programs in MENA region, which covers UAE, Pakistan, Qatar, Kuwait, and Oman, targeted at business users, including small and medium enterprises. Before taking her current role, Deepika served as a head of accounts management for the corporate business and American Express Middle East, leading a team of regional account managers and overseeing a portfolio of global, regional, and local corporate clients valued at over $500 million. She has spent over a decade of forefront of business payments in business development, account management, and product roles. Deepika started her career with Rag Bank in 2009 and is married and in her spare time, she enjoys playing sports and engaging in outdoor activities. So without taking much time, please join me in welcoming Deepika on the stage. Thank you very much.
Most of all, with this mic, really appreciate it. Usually presented with these kind of mics everywhere I go. So a couple of interesting, let's say, descriptions that I heard sitting over there. One of which was, it's only in turbulent times that we come up with new and innovative ideas in terms of how we can save money or how we can, let's say, increase our savings, but also grow what we already have with us today, right? And also maybe minimize some risk. In the industry, and having been part of this for about a decade now, it was always difficult in my role to educate corporates on the importance of looking at the B2B side of flows, right? B2C we are fine with, sorry, no problems growing over there. Everyone has cards, everyone has multiple cards from multiple banks with all different kinds of, benefits and avenues, etc., where you can essentially feel privileged and, have more control over your expenses. But when it comes to B2B, not so much. And was it about, let's say, not willing to change, right? And all of us are scared of change, and essentially we're comfortable with what we do. We're comfortable with our AP systems. We're comfortable with our bank accounts, and we're comfortable with stacks of papers on our desks, which 10 people before us sign by the time it makes our way. Because that's control as we know it and as we're used to, right? So it was taking us a lot of time, a lot of different conversations to say, hey, all this is fine and it works, there's no problems, but things have moved on. There's a lot of automation that has come in. There's a lot of control that has come in. A card payment doesn't mean that you lose sight of what you're spending and where you're spending and how much you're spending. It doesn't mean that. So pre-COVID, it was a different conversation. And then post-COVID, it was kind of like a pull approach. Earlier, we were pushing our solutions into the market. With COVID, what happened was that we were pulling these customers to us, where everyone was just like, hey, we had that conversation earlier where you told us about how, we can be more paperless, where we can manage our operations without physically going to the office and physically typing everything in and signing on documents, etc. So can we pick up on that conversation, right? And with that, we saw the advancement of our B2B solutions. And the way it has grown over the past 3 years is equivalent to how much it grew for 10 years before that, right? So I'm happy that I'm here speaking to all of you and showing you the best practices within the B2B space, kind of use cases where we see the most adoption within the industry, and then essentially where we are going next. So let's begin. I think all of you are familiar with what you're seeing on the screen right now, right? These are typically the challenges that you face as a mid or to large sized organization when it comes to your B2B payments and flows, right? So number one, let's say that you're a freight forwarding company and you have payments that you make every so week or every 10 days, every 15 days to, let's say, Dubai Customs Authority, right? When your goods have to clear the customs, etc., right? And then every time that happens, you kind of have to top up your account, kind of like an early payment or a debit or a prepaid for your goods to clear the shipment, right? And that hit is called your reduced working capital, as your payments are directly going out from your bank account, right? So that is something that we see as, limiting your cash flow and reducing your working capital. So that's just one example, but I'm sure every organization that you're from, you see this scenario where you pay immediately upon presentment of an invoice from your bank account. The second one is the risk of fraud with your paper-based statements and invoices, right? And also the check fraud. So a scary statistic that we saw was, as of 2018, 80% of the companies that we surveyed had seen at least one check fraud that had happened. A lot many had seen not intentional fraud, but errors and, let's say, mistakes in terms of writing out checks and then essentially saying, oh, this is wrong, can't be used, and then replacing that. The third one is inefficient manual processes and approvals required every step of the way. So that's what I mentioned earlier when I said, you are the CFO and the financial controller. So let's say you have ultimate signing authority, but you have several different milestones or hierarchies or workflow approvals in place where everyone has to sign manually, check everything manually before something reaches you. So which essentially means that you need longer to pay someone, right? And it's a longer cycle before you're actually able to meet your payment deadlines. And the last one, lack of visibility in total spend. If you're not automated today, and I mean, as an organization, you're probably paying 50 to 100 different suppliers, either on a monthly basis or a quarterly basis. So if you're not automated and you're doing paper after paper, so which essentially means you're relying on a couple of your headcounts to manually punch in everything into the systems, and then for you to see, where you're spending and when you're spending. And ultimately, when you have to do your budgeting, your forecast, or your audits, you're relying on all of these manual entries to get answers that you're looking for, right? These four are, I would say, the bane of the payments industry, and is limiting you from focusing on things that are most important to an organization, or kind of stopping you from meeting your objectives on the whole. To tackle those four kind of ghosts of the B2B payments, Mastercard essentially has something called In Control for corporate payments. We purposely called it In Control because when we talk about putting your B2B payments on cards, essentially an organization will feel, or your CEO or CFO will feel like, oh, we're losing control, because now everything is automated and I don't know who can use my card, who cannot use my card, and things like that. So I'm losing control. And that's why when we had to come up with a name for this solution, a name for this virtual card product, we called it In Control for Commercial Payments, or ICCP, to remind you and to prove to you that you are ultimately in control, and essentially you have all the control, all the visibility that you will need from a corporate payment solution. So when it comes to B2B payments, right, and when we say carding it or putting it on a card, a lot of organizations we see have physical cards, a couple of them, that they use for payments to multiple suppliers, right? So when I say physical card, it just means that it's a static card number with a limit that has been provided to you by your issuer. And when I say issuer, it's your bank, right? And then this is the same card number that you share with the suppliers time and again for your payments to go through. While it works for most of you, essentially there's glaring errors or let's say don't do kind of scenarios that fall in this category, right? Let's say there's some kind of fraud that happens or misuse that happens. Let's say there's card number that is leaked out, etc. So there's dangers and risks that essentially come out in this scenario, right? The solution to that, or how to counter or grow in the B2B space and lead to more automation, etc., is ICCP, or in control for commercial payments, as I said, which is nothing but a virtual card solution for all of your B2B spends. So you are an organization, let's say ICAI, and we empower you with this tool. Between us and the bank, we empower you with this tool. Now, you know, for the smooth functioning of your organization, your events, etc., you have multiple suppliers to pay to, right? You have the hotel, let's say you're having this event in this hotel, so you have to pay to them. You might have some F&B partners that you might have to pay to. You might have transportation vendors that you might want to pay to, etc. So once you have this ICCP platform, essentially what you can do is, for every supplier that you want to pay to, you can generate a virtual card number in a mere seconds. In mere seconds, you generate a virtual card number, and you can decide if that particular card number can be used for one transaction only and that transaction alone, or you can decide that, okay, I want that virtual card number, but I want that vendor to use it multiple times. So each vendor, I want to create a virtual account number, let them use it as many times as possible. I'm still controlling my expenses because the card number is visible to that organization only and it is not being leaked out, right? So that is essentially the concept of ICCP. So some of the main features or the key features of ICCP is unique card number for every transaction. So as I mentioned, a new card number is generated for each transaction. And up to your level of controls, depending on how much control you want on this payment cycle or this process, you can say, as I mentioned, I want one transaction or one card number for the property. I want one card number for the transportation company. I want one card number for my travel agent through whom I make the bookings and tickets, etc. Essentially ensuring that you have complete control and you're preventing fraud or misuse from happening. Set transaction level controls. Now, for each virtual card number that you generate, you determine what is the amount that can be transacted, right? So let's say Ms. Malvika decides that, that I'll generate a virtual card number for Swiss Hotel. I'll enter the amount that I need to pay because you have invoices already from the hotel, right? So you know that, let's say 10,000 dirhams is what I need to be able to pay to this vendor. So you enter 10,000 dirhams. You can even decide on what date this particular virtual card number can be used by the hotel. So let's say on the 20th of September, after my event is over, I want the hotel to be allowed to use this transaction. All of these are parameters that allow you to control how much you're paying, when you're paying, etc. So you are in full control even on this virtual card number. Get enhanced data. So every time that you create this virtual card number, you have the ability to add as much data for your reconciliation as possible. So let's say if you had to use your physical card that you have today, you see 4 fields when you see the statement, right? You see the date of the transaction, you see the posting date, you see the name of the merchant, and you see the amount. These are the 4 fields that you see when you see your physical card statement. In comparison, in ICCP with your virtual cards, not only can you see these basic fields, you have the ability to add rich data to each transaction, thereby helping you with your reconciliation later on, right? So for instance, you have up to 30 additional fields where you can decide what needs to be populated. So end of the month, when you download your statement, it's readily reconciled. Let's say you can use one field for a cost center. You can use one field for a VAT registration ID because tax is coming up next year, right? So you need to have controls and processes in place that can help you to say pull out and, hey, what is the vendor, what is the VAT registration ID, how much have I paid them, and ultimately help you with your tax returns, right? So it's coming directly issued by your bank which is powered by Mastercard, right? So you essentially choose what information you want to see in the statement, and that's how you get your enhanced data. Automated reconciliation, again, it's an extension of getting the enhanced data, right? So whether end of the month or mid of the month or every week, when you extract your statement, you're seeing the transactions that have gone through and the data alongside that to help you recognize what has been paid already. So any given point of time, your boss calls you and say, hey, how much have you paid? And how much have you spent? Or how much have you paid to this particular vendor? You don't have to call different people in your team to ask or get this kind of information. You're able to go to your portal, which is available with you, and with a few clicks, you get this information which will help you with your recon or basically answer your bosses. The last one and the most important one, and essentially this is the one that we get asked most often when we are pitching this to the end corporate, which is who's approving this and how is this virtual card being created, and will everyone and anyone be able to create a virtual card number? Well, the answer is depends if you want that, but generally you would want a couple of different layers of approval before a virtual card is generated, and that is possible through this tool. So when your program is being set up, you can assign different users who will be part of the approval process, so that let's say when someone from your accounts payable team wants to generate a token or a virtual card number to pay, let's say against Swiss Hotel, they'll create the token, they'll say submit, it goes to the approval number 1, who kind of check all the details, everything looks good, they hit approve. It goes to the second level of authentication, who again check everything, looks good, approve, as many times as you want. So you're not losing control. If you want 5 levels of hierarchy into this, very much possible with this tool. A bit technical, but just for you to understand how in control works, right? So right here, essentially, you have a buyer or an accounts payable person who generates the token by going into the in control platform or the tool. The second step that happens is essentially the person will enter all the required details, so the supplier name, the amount to be paid, and on what date, and whether or not the amount paid should be exact or you want some level of threshold, because that is allowed to, because you might know, depending on the supplier, there might be a 5-10% variance or threshold that you want to permit at the time of payment, so you can set that as well. You will submit, the acquirer then submits the virtual account transaction. Now this is the in-control ecosystem that happens, right? So every virtual card number is linked to a physical card number, and once you go into the in-control platform, oops, I missed a slide, sorry. Yeah. So once it goes to the in-control platform, a virtual card number linked to the physical card number is generated and sent out for payment. It's very simple, very quick. It took me longer to explain to you, and it takes shorter time for that whole virtual card number to be generated and sent out to your suppliers, right? I have a short video that will show you how this
Introducing Mastercard in Control, the most innovative and robust virtual card solution on the market. It's a flexible, simple, and secure way to organize payments to your suppliers. In Control helps to streamline B2B expenses, allowing you to create and manage unique virtual accounts and use them to pay for all kinds of goods or services. Dynamic card details can be generated simply and easily in just a few clicks. Every virtual card number is associated with a transaction or transactions, not tied to a person or department. This allows you to keep companies' funds secure when delegating online purchasing to your employees. Set parameters for when, where, and how your virtual accounts are being used. Set payment controls to define how the card is used for spend categories such as air, accommodation, meals, and other expenses. Generate and export predefined reports within seconds. Get essential information about account activity for audit and tracking. Grow your profitability and revolutionize corporate purchasing with enhanced program visibility, increased efficiencies and security, improved reconciliation, and rapid payments. Empower your cardholders with Mastercard in control.
So that was a good summary on In Control. I spoke for 15 minutes and then in 1 minute it explained to you what it does. So I hope that was a good summary for you. Now, a bit more in terms of what ICCP does for you and how it helps you. And when I say ICCP, I mean In Control for commercial payments, right? So number one, it helps you with your savings. So increases rebate generated card spend. So all of you corporates have your treasury relationships or banks that you prefer to work with, where you have most of your funds lying. So essentially what you will be able to do is, and I believe most of you would be aware that the more spends you put on a card program, the better the rebate that the issuer can offer to you, right? So if you're paying to your suppliers from your bank account, you don't get anything. But essentially, if you're able to put it on a card, you can get a rebate program. You can get enrolled into a rebate program from the bank itself. Better supply negotiations backed by robust reporting. You have a supplier who's given you 30 days to pay them, maybe 10 days to pay them or 15 days to pay them, doesn't matter. Now, with In Control, there is a lot of detailed reporting that you can generate. And let's say, after the end of a cycle, let's say after the end of a year, or let's say 14 months, you are able to generate a lot of reports that you can take to your supplier and say, hey, see, this is the kind of business I'm giving you. I'm spending a lot with you. So why don't you extend my payment terms from 10 days to 20 days or to 30 days? So this helps you negotiate with your suppliers with the kind of data that the tool offers to you. And then to, of course, improve your working capital, because instead of paying immediately, the kind of government example I gave you, you're putting your funds on the card, right? So you're paying through the card, and then you're paying as per the card payment cycle, right? So your payment terms can go up to 55 days or minimum 30 days, depending on when the card has been used for payment. In terms of security, everything that I said before in terms of, single-use card, you control how much you pay in terms of the amount, in terms of when you pay, etc., comes as part of, the security aspect. Every card number is dynamic. So once used, that's it. It cannot be reused again. It's null and void. So extremely secure in terms of using the virtual card. And reduce fraud and misuse. So basically covered everything. I wouldn't want to repeat myself again. In terms of efficiency, as I mentioned, every time you generate a virtual card number, you are able to add more data against that transaction that will help you with your reconciliation, right? So if you're paper-based, when you have to reconcile, you're basically scammering around everywhere to get information to understand what this payment was for and, or what was the nature of the transaction. But today you get that immediately with the help of the recon tool. In terms of flexibility, so the tool essentially allows you to download data and then, or essentially integrate directly into your ERP systems. All the organization, or I believe all of you would have some or the other form of ERP system. So you can directly integrate this particular data into your ERP system. So it doesn't change anything for you from an accounts payable perspective in terms of, let's say, forecasting, budgeting, etc., right? So you're still within your compliance policies, you're still within your card control or card payment policies, right? And essentially all of these particular, your data reporting and everything is part of something called smart data. So In Control is the ability to generate virtual card numbers, which comes under the ecosystem of smart data. And that's another video for you. So here I would just like to point out the difference between ICCP, which is in control for virtual card payments, which is a tool powered by Mastercard, and then something called a store and rotate. So maybe I'll take a minute or two to explain what that means. So both these concepts essentially mean that a virtual card number is generated and provided to the customer, to the corporate essentially, for supplier payments, right? Now, store and rotate essentially is a program where there's a set number of virtual cards or a limited number of virtual cards that are produced or in production. And every time a corporate has to generate a virtual card number, these are rotated. So let's say I have a virtual card number that's generated today, and maybe a few months down the line, I want to generate a virtual card. That system will recycle one of the virtual cards numbers that has previously been generated and send to me, right? That is something we call store and rotate. It goes against the principles of virtual card numbers, right? Because by definition, a virtual card number is supposed to be dynamic in nature, and once used, should not be regenerated again, because that goes, if you do that, you're going against the principle of a virtual card generated transaction. All we're trying to say here is this happens a lot in the industry today, but with ICCP, essentially, a new card number is generated every single time. There's no recycling that happens. You are in control, you have all your visibility, and you have all your control that takes place. No storing of card numbers in ICCP. These are just some of feedback that we have received. The most common one is, we used to pay our suppliers, it was bank transfers, etc. Now we put it into card and we're generating rebates. That's the number one benefit, or that's number one feedback that we get. And the second one is in terms of process efficiencies. Because you're automating so much of what you do today manually onto in control, so you're automating everything, thereby making your processes more efficient. In terms of how these virtual card numbers are generated, you can use the web-based application. So let's say if you're an organization that doesn't have hundreds of transactions in a month, you have a couple of transactions that you need to generate every week. You can just as well go to the Smart Data application, enter the parameters, set your virtual card number, and let it go directly to your supplier. The second option is an AP batch file, where let's say you've got 10 to 20 transactions. So again, you have an Excel sheet, you do a batch upload, and then those many virtual card numbers are generated, and then sent directly to the supplier for payment. The last option is API, which is extremely automated, and essentially, for someone, if you have hundreds of payments that you have to make on a monthly basis, it doesn't really make sense for you to update all the details on the system to generate a virtual card number each time manually. Again, that's very laborious and time consuming. So what you can do is set up an API that essentially links your systems to your bank and Mastercard, so that every time you run an API or there's an API call, the virtual card number is generated. So depending on your need, depending on the size of your operations, you can choose how you want the tokens to be generated. This is quite important for us as Mastercard to show every time we kind of speak or go to a forum, right? So in a payments ecosystem, there is a corporate, there is a bank, and then there's Mastercard, right? So I'll summarize this very quickly. We empower the bank, which is the issuer, to sell our products, right? Mastercard does not issue cards and does not provide those card payment solutions to the corporates. So if you liked what you saw today, you would essentially have to go to your bank and say, hey, do you have this Mastercard in-control program or the virtual card program? Based on your relationship with them, they will kind of see all your KYCs, all your lines, make sure they do your due diligence, and kind of set the product up. As and when required, we do get involved for trainings, etc., but it is essentially a relationship primarily between yourself and your bank. I'll skip through that because I've been told that I'm at time. And yeah, essentially this is all I had in terms of virtual card payments. I hope you found this beneficial. If you have questions, please let me know. I'm sitting right there on that table. Thank you.
Thank you, Deepika, for letting us know about the adaptability of B2B ecosystem and with Mastercard. A big round of applause for Deepika. May I now request our Chairman, Vice Chairman and CA Rishi Chawla to present a memento to Ms. Deepika.
Thanks a lot.
It's now time to hear from our chairman that what's the plan, what's in his kitty, considering the changes in market dynamics, specifically for upcoming corporate tax. So let us welcome Chapter Chairman Sri Anurag Chaturvedi to the stage with a big round of applause.
Thank you. First of all, I will request to give big round of applause to our Secretary, C. Manoj Agrawal. Not only because he ran the session very well, but a very well efficient person that I've seen in my career in ICI or probably my service in ICI, because somebody who thinks so passionately about members, their needs, and who integrates the team so well. So he deserves definitely a big round of applause, friends. This topic was very, very close to my heart. The reason is that many SMEs, they connect with me in day-to-day basis. And essentially all of them have a very interesting challenge that they face about the credit. So while we talk about industry colleagues and obviously, Bhavin, when I spoke to him, he was ready to, act on this topic and facilitate the entire thing and an entire team altogether from Mastercard. This concept was quite long into, in industry, but then it's very less known to people. It enables you to add 55 days typically to the max to your credit cycle, right? And which is like a lifeline for a lot of SMEs and startup businesses out there. So essentially, this is something which you all can utilize and make sense of it, right? So esteemed guests of the day, Mr. Mohit Hare, Ms. Deepika Sitlani, Mr. Manish Mathur, Mr. Viram Shah, co-founder of Vested Finance, members and guests, vice chairman of the chapter, managing committee, and all of you. Good morning, everyone. I think I need to give a little bit more josh. Good morning. Right. So first of all, I would like each one of you to applaud for our title sponsor, Saudi German Health, for two reasons. They are the one who always stand by us and support us, because wealth, today we are talking about the wealth, but besides wealth, the health is also very, very critical, right? And what they're doing, besides obviously sponsoring our events and sponsoring ICI in our objective and achieving the objectives, they're also enabling us to stay healthy. And for that, they are creating a lot much awareness by performing a lot of tests, right? A lot of health tests they're performing. So if you haven't taken in past events, you can take in this and upcoming events also health tests. So big round of applause to our title sponsor, Saudi German. So the question, since we talk about the financial advisory, right? How many of you have credit cards? Wow. So everybody has a credit card, right? Who knows when the credit card was first launched? None. I expected this. So 1950 is a year when the credit card was launched, and the first card launched by the Diners card, and then American Express, and then so on and so forth. It becomes the history then. But what is this credit card is all about, and what is all these credits, why these credits have been given to businesses? Do really people have benefit of using the credit card apart from being socializing? Do you have any benefit? Do you see, is it beneficial to you? Does it make sense to have a credit card? I mean, besides the fact that you can't live without it, obviously. But do you, any one of you have benefited out of credit card? Really? In what sense? Did you make money out of credit card? Cashbacks is only what you know, right? So, sorry? Very good. Movie tickets, yeah. So besides these perks, what else you know about the credit card? I mean, obviously when you're traveling out there, you have a lounge access. Sometimes some of the malls that you go out there, you have the parking facility. And but these are the very fine things, like, very, very small, minor things out there, which you probably essentially say 30 dirhams, sometimes 15 dirhams, sometimes this. But over the month, when you say that how much money that you paid on the credit card because of this ease, you are not in control. Are you in control of that? Right? Many not. But I done a little bit of research for this particular event. But there are greater things. There are a lot of greater things that you can really benefit using from the credit options out there. And one of that is something called credit card arbitrage or credit arbitrage, right? So I'm sure many of you have received a lot of calls from the banks. And please don't take my advice because a disclaimer is there. Please use your judgment and your situations carefully before doing that. But then I was researching about it, so that I thought probably it's good to share with you. Often you receive a lot of calls, obviously from issuers, the card, not Mastercard, but issuers, a lot of banks. They tell you that, oh, you take the loan against your credit facility, and then you can go and pay me around 12 months with a interest rate of, let's say, around 2.5 or 3%. And today, we all are chartered accountant. We have so much knowledge about shares. We have so much knowledge about cryptos. How many of you know cryptos? So many people, right? So cryptos we have, and turbulent times, obviously, that we are talking today. So turbulent times, there's opportunities for making money. Right? So you can use that arbitrage. Sometimes the good interest rate is there, and people who understand the commodity rates out there, they can further send the money well ahead in time using the best rate, sometimes gold and sometimes whatnot. So you can do that, essentially. So there are advantages. And obviously, if you plan your spending as this Mastercard in control that we talk about, you can really save a lot of money. I mean, essentially, in a business, every month there's a spending of nearly 50 to 100,000 dirhams in terms of making the payments towards the government fees and not. Many government fees, except the FTA, I'll disclaim, FTA they charge 3.5%, but a lot of people, other ones, they have they don't charge processing fee. So, a lot of government payments are also without card fee. So you can definitely earn a lot of cashbacks, and then at the end of the month, you say that you probably have accumulated money enough to buy your Rolex, or maybe your Tesla, or maybe something enough, right? But friends, so this is one side of the story. The second side of things is that we talk about turbulent times. This turbulent time is just now, or it always there? Every business may have a blossom time or turbulent time in the course of its maturity, its growth. Correct? But that turbulent time for one business is an opportunity for another one. Isn't it that? You agree with me? Right? So basically there is nothing called turbulent time. It's a time of opportunities and downsides for some or other people out there. So in this time, we all what need to do that is to understand which opportunity, what is the time for an opportunity, how we can capitalize this opportunity, and what not, through the right knowledge. And to empower you with all that, we have today experts who are using these techniques, tricks, to rise up their organizations, their own personal self, and what not, right? So essentially in today's time, turbulence is not there. The market remains turbulent for us to earn a lot of money. And I always believe that there is no turbulent time. There's always a time of opportunity. So use your options wisely and decide how you can benefit out of those situations. Obviously, experts today, Manish ji is here. He will going to share more about how he used these times of turbulence for a lot of people as an opportunity for his business, and probably Mr. Vimal Shah as well. He's going to talk about how the investment world we can make money, right? Obviously, you or your own judgments out there. Don't rely on the speakers. Friends, we are now in a month, fifth month we've completed. We are now going to be in 6 months. In these 6 months, I'll say that, we have done 20 CP events, 20. We've done 4 workshops. And in fact, every month we have done a family event. Did you enjoy it? No, I don't think so. No. This low volume when you're saying enjoy, no. Friends, remember one thing. Why? If you not empower, you'll not encourage us, we're not going to do much more. There's 6 more months. You want more excitement to come in, more things to come in, you need to really encourage the managing committee. That's it. That's the spirit. So we are now doing what? We are well informed and we well understand that what you all need. You need much knowledge on the tax, which is going to be reality pretty soon, probably this week, probably the following week. So we are geared up. As soon as the law comes in, you'll have the first event straightway on the upcoming weekend. So if the law comes this week, you have weekend event where we'll expect 1,000, 2,000 people out there to talk about dissemination of the corporate tax and dissecting about it. We also think that we are also responsible towards your family. And that's why CA Manoj Agrawal, Secretary of ICI Dubai Chapter, he thought this idea to organize Dandiya for all of us, so that we can take a little bit of stress in the ground. When we dance out there, we remove all the stress along with your family. So we have a Dandiya night on 24th. At the same day as well, for those who understand the poetry, who understand literature, for them we also have the event Ibadat, which we do every year, but because of COVID we could not host in past. So we are coming Ibadat on the same day, so evening you can do Ibadat and then going forward for Dandiya night, that's there. We have World Congress of Accountants coming in. I'm going there personally. My lot of friends are going there. Our entire managing committee is going to be there as well. I encourage each one of you to come forward, meet the people, because in the profession, if you understand things out there, you'll be better, efficient, prepared, well ahead of the time to perform in the career, in your organization, in your profession, and so on and so forth. Okay. Then we have annual international conference coming in. Annual international conference, we have got fantastic speakers. Fantastic, I'll say that. And you will not be bored, like generally the events are bored. You will not get bored. I'll ensure that we people extraordinarily talented that we got. We'll open with Mr. Boman Irani. I'll keep it session exactly at 9 o'clock. So whoever will be late 1 minute, he'll miss that. And by the time you come, let's say you got late for any reason, 10 o'clock his session is over, you'll not see him. 11 o'clock, we'll be having another very finest speaker who's IRS as well as chartered accountant, extraordinary of story of excellence, 11 o'clock. So if you're late and you miss, I guarantee you that you will not, you'll miss that missing moment. So don't come late on that day. Ensure that you take off or whatsoever if your work is there, something pretty put in time. We'll also be having an event to recognize your achievements in form of CFO awards. So we are working to organize first kind of, CFO awards, which is the people in the finance we want to recognize the excellent work that you've done, excellent organizations that you're serving in. We'll organize that event, and the entire managing committee, along with my, ex-com member, CA Rishi Chabla, who's working along with me. So be ready for that. And how many of you play golf? Quite a few play golf as well. So for golfers also, we are coming with a tournament, golf tournament, which is ICI golf tournament. So a lot much excitement is there, many more excitement is there. We are talking about a startup, we are talking about quite a few more things. But all these things will happen if you continue to encourage me. If I don't see a message, sometime encouraging managing committee for good work, boss, next month, forget about event, because CPE criteria we have already filled it. So ensure you continue to encourage everyone. No encouragement, no event. Thank you so much. Thank you so much for listening out there with me. And over to you, CA Manoj Agrawal.
Thank you, Chairman Sahab. A big round of applause that he is engaging members and families as well. So the members who are registered for Dandiya and Ibadat, they must have opted for a pickup location, but since many of us are here today, you can collect your ticket or passes. Listen me now carefully, only after the event. So ONLY in capital, only after the event. When I say after the event means after vote of thanks, which is to be done by C. Amit Khetan. तो काउंटर पे जाके लाइन नहीं लगानी है, मच नहीं करनी है वहाँ पे, टिकट दे दो मैं जा रहा हूँ बाहर मेरी गाड़ी है, प्लीज़ respect everyone's time. So we have a protocol. After the events, once it's concluded, you can go to the registration desk to your respective pickup point. That ExCom member will be there. From them, you can collect the tickets or passes. So next, moving towards the next speaker, digital transformation. This word itself describes the reimagining of business in the digital age that follows to bring changes driven by technology, but centered around people and processes. Because for technology, we need people to follow that. Technology has become so persistent that it could and should have an essential effect on procedures. In the era of disruption, technology also changes the way of financing, and the focus is now moving towards digital finance for businesses and individuals. To relate the finance and technology in turbulent time, today we have with us our next guest speaker, Mr. Manish Mathur. So you need to give him a big round of applause. He is my boss. To introduce Mr. Manish, I would like to invite our ExCom member, CA Malavika Kolera, to the stage. Round of applause for her as well.
Good morning, everybody. To introduce our next speaker, Mr. Manish Mathur. He is the CFO, Dabur Group International Division, and is one such visionary leader who has not only protected the business amidst the crisis, but has translated the challenges into new business opportunities through his multi-pronged strategies and meticulous due diligence. In his successful ride of 21 years in the financial realm, Manish has garnered abundant global experience in spearheading strategic finance functions in the Middle East, Africa, Europe, North America, Russia, and West Asia, raising the bar higher for himself with every project he takes on. He has successfully developed and executed numerous critical initiatives that facilitated Dabur to achieve a meteoric rise. Please join me in welcoming Mr. Manish Mathur.
Thank you, ma'am, for the warm welcome. You know, one of the first things when I entered this event, I must tell and share with you, there's a lot of positive energy in this event, and I think this positive energy is attributed to the managing committee of ICI. So big round of applause for the ICI managing committee. Also, thank you everyone for making it on a Sunday morning and leaving your families and coming here. I think knowledge in the present world is all about sharing, you know. So we are now living in a sharing economy. So it's not a person with 25 years of experience will have more knowledge than a person who has 5 years of experience. Knowledge is available on the net, you know, anybody can have access. But the new economy in the new world is all about sharing, and we are now living in a sharing economy. While the topic was about prudent spending and safe investments, I think I like the first line, which is prudent spending, which all of us should be disciplined to. And while I'm not going to talk about investments, but some of the experience which I want to share is that prudent spending is very important, so one should have a disciplined approach of spending. And my request to all of you is invest in any asset class, whether it's debt, equities, cryptos, commodities. Invest not on the advice of anybody, do your own research, understand it well, and only then invest in those asset classes. And thirdly, always keep 15 to 20% of your net worth in dry powder, which is liquid assets, so that you can have opportunities and you can capitalize on those opportunities. But the topic I thought I will pick up today is taking a step back on digitization. There's a lot of technological changes happening around the world, as we see, we experience it, and also as we know about it, or something which we don't know about it. So I thought, let me pick up a topic and take you through that what are the changes which is happening around the world as we speak. Something which you know, something which you don't know about it. But there's a huge technological revolution which is happening around the world, and it is going to impact the finance industry in a big time. The banks will have a very turbulent times to exist as the technology is evolving and as the rise of fintech is happening around all the fields of finance. So instead of turbulent times, I have picked up it's the age of disruption. So how the trade and finance has emerged. So there used to be a barter system of exchange of goods. Then we moved to gold coins to do business. Then currency coins and notes emerged. Credit cards and cashless transactions emerged. Internet banking and transactions from convenience of home is the new way to do business. So all of us are now using and experiencing fintech on our smartphones, whether it's payment gateways, whether it's investments. So let us understand what is fintech. Is fintech equal to tech for finance? Any guesses? No, it is not. So technologies are various technologies financial services use, which is cloud or Internet of IoTs or AR or blockchains, but it is not disruptive. Is fintech equal to tech fin? It is not. So the biggies like Amazon or Facebook or WhatsApp, while they would have entered into finance sector, but they are not primarily a finance service company. Fintech essentially means innovation and disruption in offering of financial services through technology, and the most important thing is for a better user experience. So anything which gives you a better user experience in financial world is fintech. And this is done with the aid of new technologies. So if you see the emergence of Google Pay, Apple Pay, PayPal, M-Pesa is one thing. I don't know whether you have heard about it. It's Kenya. It's revolutionized the payment system in Kenya. Paytm. These are the fintechs which is changing the ways we do business. So there are various factors which are driving this fintech evolution in the present world. The most important is the rise of millennials. The millennial mindset is expect a faster response and instant gratifications. So they discover content on social media and they want to execute it. Thank you. So if they like something on the social media, they want to buy it, they want to experience it, and they want to engage with trusted brands. They don't want to go anywhere to do their purchases. Everything should be on their smartphones. Therefore, it is very essential to give solutions to the millennials on their smartphones. The technology is improving a lot. Computational infrastructures has improved. Everything is moving to the cloud. Internet of Things, which is basically various sensors like your smartphones. You have smartphones which talks to your Bluetooth in the car, which talks to Alexa, which talks to your Wi-Fi networks, is enabling the various data to be captured through various devices. Through this data, the biggies like Apple and Google's, they create data lakes and collect your data. All of your data is being collected by them. They are watching your behaviors. They are trying to tailor-make the products after watching your behavior. Then we apply artificial intelligence and machine learning and develop various algorithms to analyze the stored data and conduct their probability analysis. Of course, everybody is driving digitization. Now people are talking about digital identity also. For example, UAE Pass, Singapore also has Singapore Pass. Now banks have limited experience on this new ways, the way millennials want to do business. or conduct their payments or their purchases. Also, the government is also evolving on various regulations and create opportunities. For example, Eurozone has triggered an open banking in which banks are allowed through APIs to open and share their data with various fintech firms. Now, the rise of fintech is enabled by various technologies. One is, of course, cloud, so there is no need to own various data servers, invest a lot of money on data servers. To the extent you need storage, you can take it on the cloud, which is cost effective and also agile. If you don't need it, you don't pay for that. The likes of Amazon, like Amazon Web Services, they know the compliances with security regulations, so you don't have to bother. So fintechs don't have to bother about those. Also, geographical expansion happens in minutes. Then banking APIs, banks are now allowing third parties like various fintechs to access their information to deliver new services. Blockchain is the most secured technology now available. It's just not limited to cryptocurrencies. Various banks are also experimenting opening letter of credit on blockchains, and they've been successful in various use cases also. And blockchain is almost impossible to hack due to the number of blocks it has, and nobody can duplicate the records. It has copies in many systems. Now, robots are the new co-workers in this digital age. So extensive support through machine learning without getting tired or impatient. The fifth technology is advanced analytics. So your data is being extracted and being massaged through AI and advanced analytics, and they develop predictive modeling. For example, if you are talking about travel to Maldives or Seychelles, Alexa is watching it. And the moment you open Google, they will throw various packages about Maldives or Seychelles. Then AR and virtual reality like Google Lens and virtual branches, they are the tools to enhance reviewer experience, which millennials want, and also appealing graphics to acquire customers. This is one of the most important things, which are the sensors, which is collecting your data and throwing it to the servers, Alexa, smart home systems. So interconnected devices to exchange data disrupts every industry. Digital security is at the heart of fintech now. It is directly related to consumer trust. So Anurag has mentioned about credit cards. So this is the journey of financial services. 1958 was when the credit card was launched by Bank of America. 1966, Bank of Delaware pilots first debit card. 1967, Barclays installed its first ATM. 1983, Bank of Scotland started online banking, and by 1990, many US banks had their own websites. Come 1999, PayPal introduced the online payment transfer technology, and in 2006, it launched its first mobile platform. 2008, first cryptocurrency of the world was invented using blockchain, which was 100% secure. 2011, Apple Pay launched through NFC technology. It's a near field communication technology, which is tap and pay. And 2016, UPI-based systems are being implemented across India using your mobile numbers or QR-based protocols. Now, it's a case study of M-Pesa in Kenya, which was done by Vodafone. Without the need of bank, you can make payments, and 60% of the population is now on M-Pesa. So the bankable population has increased from 16% to 40% in Kenya. So what they did, so African economies have these four fundamental issues: poor infrastructures, most of the population resides in rural areas, they don't have access to the banks. So they have cash, how do they deposit cash, how do they transact business? A lot of corruption, poverty and illiteracy. only 14% of the Kenyan population had bank accounts. There's no physical safety for storage. Robbery of cash was common in Kenya. Public had to visit office, shops of supplier to make payments for utilities and goods. People in rural areas had to travel with cash to the homes to transfer cash since they don't have bank accounts. So Vodafone came out, or Safari.com came out with a solution. It's called M-Pesa, in which your phone number becomes a wallet. So what they did, they created a network of agents, which can be grocery shop, a pharmacy shop, across Kenya, which can be in rural areas also. You can deposit your cash to them, they will put in your wallet, and through your wallet you can pay to anybody or transfer to anybody. So there is a sales teams of Vodafone, so there is banks, there are master agents, there are retail agents. Retail agents is one retail agent for every 1 kilometer in Kenya, anywhere in Kenya. So public now do not need to have a bank account, or they have to visit bank to deposit cash or to ensure safety of their cash. There is consumer to consumer transfer sitting at home without the need of any physical cash. Utility payments made easy, and payments for goods or services through wallets. So now 96% of the households today use M-Pesa in Kenya. There is at least one M-Pesa agent per 1 kilometer in Kenya. Bank account holders have increased from 14% to 40%. It has crossed around 30 million active users, 60% of the population with 90% market share. So more mobile payments leads to lesser corruption and enables government to attend public issues effectively. So this is how they have changed. There is no need for any banker. So Vodafone, through this M-Pesa, has transformed this economy, and they have become the new fintech in Kenya. So we all use Apple Pay. So another case study on Apple, what they have done. In 2014, they announced Apple Pay. More than 1 million credit cards were registered in the first 3 days. At the start of February 22, they launched Tap to Pay. Now you can transfer money also on iMessages in US. So what they do is they use near field communication technology to make payments across short distances. Also, your credit card is not stored in Apple or iOS. So what they do is they create a unique token of your credit card, which is called tokenization. So therefore, it cannot be misused by any merchant, and they don't have any access to the credit cards. Now, Apple is even launching Apple Pay Later, which is you buy anything through your Apple Pay and pay to the Apple later. So there is no need to take any loan from the banks or use your credit card. So they are going to disrupt the banking industry also. They are also in touch with Mastercard for credit evaluation of the customers. Accordingly, Apple is going to lend credit to the customers like you and me. Of course, artificial intelligence is playing a big role now in the fintech industry. So these are basically programs which carried out by machine, which replace human intelligence, and they massage the data, they do predictive modeling. And machine learning is a subset. So machine learning is largely, machines are taught to think like a human mind. For example, driverless cars, they will stop at the red light and they will start at the green light. So they are taught how to think like humans think. So how AI is driving fintech is, now you have robotic advisors. So they analyze on your investments also, in equity markets also, they analyze the stock markets, they analyze the target price, they analyze the market conditions and help you, and also advises you to make investments in various stocks or in various asset classes. So KYC, customer verification, is done through machine learning. Deep learning is being used to recognize buying patterns and help business to make more products that suit customer preferences. So consumer mind is being read by these biggies like Google or Apple, and basis your preference on the social media, they are able to predict what you want, and they are going to offer products or services basis your behavior or basis your requirements. So while you don't know, but they are watching you, your behaviors, your requirements, and they are tailoring made the products accordingly. Chatbots are there, they use natural language processings, and they virtually interact with the customers, take their feedback and queries. Cognitive computing, they attempts a complex sets of algorithms by linking various factors in taking a decisions. Like I have spoken about, self-driven cars analyze a variety of factors like terrain, traffic, and accordingly they run. RPAs, they mimic human actions, so most of the documents are scanned and processed without any human intervention. So some of the few examples in which AI is being used in fintech is Mizuho Financial Group in Tokyo. They have developed a human robot called Pepper to handle all the customer queries. They partner with IBM to help understand human emotions and also build effective interactions with humans. Royal Bank of Scotland have developed a new customer service assistant called Lovo to interact with staff and customers. AXA Insurance has developed an app-based bot called Extra. They interact with customers on healthy living. Goldman Sachs has sacked 600 trading partners and replaced with 200 computer-based bots in order to do trading. So they 1/3 of the trading partners, or 1/3 they are more efficient, and 1/3 of the computer-based bots are able to replace with 600 trading partners. So they have automated equity trading through these computer-based bots. Citibank has made strategic investment in Features, a global data science company, to eliminate fraud. JP Morgan Chase has invested around $1 billion in a contract intelligence tool called Coin. So they have reduced the number of errors on various mortgage contracts, and they have generated a return on investment of around 20% after investing $1 billion on this contract intelligence tool. So now they don't need any lawyers to go through the contracts and interpret clauses.
Manish, I have one question.
Yeah.
So essentially, like in the world of today, when we're talking about digitized, economies, digitized payments, and you talk about the data as well, like mining. How do you integrate all these things together at Dower? I mean, I'm sure Dower is like, the big conglomerate, obviously in India, most of people use Dower, different sort of products out there. How do you understand these sentiments? And is there something at your treasury level that you have probably done to simulate your cash flows efficiently? That's why you are able to expand globally. So what is there any use case, or is there any specific thing that you want to share with us from a Dower perspective that you've done?
Yeah. So Dower now is moving towards predictive modeling. First, I will talk about consumers. So you see a lot of movie campaigns, for example, Z will take rights for a movie campaign. Through predictive modeling, they will know whether they have to take this campaign for this movie or not. So what Dower is essentially doing is, they are trying to have their own apps on the various consumers, and also on various social platforms we are very active and trying to engage with the customers on Instagram, on various other social platforms, understanding their behaviors and tailoring made their products accordingly. So millennials wants different things. For example, now we have a website in which we ask the customer, what is your hair problem? And they tell the hair problem, and accordingly we mix a unique product unique blend of oils and deliver to them. So this is what we are doing for predictive modeling, and accordingly we are going to tailor-made the products for the millennials. Now coming to the cash flows, what you are saying. So after digitizing all this, if your front end is digitized, you know your forecast is accurate and the new launches are going to be good. So we have integrated it all backwards, and our now most of the transaction processing cell has moved back to India. We have put in robotics process automations in which we have reduced people to process accounts payable jobs. We have reduced people to do planning jobs, and it's all done by bots. And right now there are around 14 bots which are being employed by Dabur back in India, and we are going to continue and employ in more and more processes these bots so that things become more automated. And the vision is that predicted cash flows, predicted profitability can all be generated through bots. That is what we are trying to do. I hope it answers your question. So this is some of the examples which is happening around the world, and I think you guys must be experiencing it. But I thought just let's take a step back and share with you what's happening around the world so that you understand what your experience is experiencing for what, and what are the reasons and what are the technologies behind it. Any more questions?
Given that more and more bots are coming in, where do you see the profession going?
I think professionals will change. If you see accountants, pure accounting, it's going to be replaced by bots slowly, and depends on the economy. In US, for example, in big four firms, they will not employ accountants. They have bots to run. For example, a project manager knows what is his ROI going to be basis various parameters. The bot gives him the ROI. But the new skills will emerge. It's more about finance, corporate finance. Even in banking, the banks will have hard times. So what will happen is, in banking exists for 3 reasons, which is trust. People trust banks. They know the regulatory environment. Which fintechs, you can't trust any fintech. But they are very disruptive. They create new solutions. So there has to be an amalgamation of banks and fintech, which is happening as we speak, because both of them will coexist. So banks will open through APIs their data to certain fintechs, which can provide good solutions, which is marketable and has a base which can grow the market for them. So this is the new trend which will emerge, because millennials don't like to visit branches. So why do you need a bank? Access to funds or payments. Payments can be done through wallets. You have seen Vodacom has, improved the bankable population from 14 to 40%. So these are new skills which will emerge. So I think people will have to understand technology also. But new skills will emerge, but the role of backend is going to be replaced by bots sooner than later. Yeah?
Just to, Mr. Mathur.
I can't, okay, yeah.
Just to extend what you said, so that means fintech role will remain only for payments. See, they can't do any trade, they can't do deposits, they can't do lending. So technically, this is nothing but addition of payment banks only, or payment tech, pay tech kind of, and subject to charge also. Today, because they are not charging, the moment they start charging, I'm sure their role will also become less and less.
See, fintech is just not about payments. You will see fintech emerging in investments. Right now, if you have to do investments in equity, cryptos, you need an investment advisors. The investment bank advisors comes to you, talks to you, and tell you, okay, you should invest in this stock, or you should invest in debt, or you should invest in crypto. Then they have their huge KYC. They will ask for a lot of documentation from you. Now, there's always a bias. When an investment advisor is selling you any product, they have a bias. Their commission may be higher, their incentives may be higher. Robots are going to replace it. You will have a robot advisors going forward, which lot of apps have already launched. So robots will understand your risk profile, which is largely about your risk tolerance. That is your behavior. You want to take more risk or lesser risk. It is also about your risk capacity, how much money you have to invest. And thirdly is your financial goal. If your financial goal is at the age of 60, you should have $3 million, for example. But your risk profile is you are a very conservative investor. And your risk capacity is you have money to invest more, then your financial goal will be adjusted and the risk will be adjusted. So all this will be done by robots and bots. And there's a lot of fintechs which have already launched and are in the markets. So you will, in future, will be talking to a bot about your investment advice, and also they will be guiding you basis your risk profile. Now you are a bachelor, so your risk profile is different. You have kids, now your risk profile is different. The markets are crashing, the risk profile in the market changes, the equity markets are crashing, the debt markets are rising. So they will, basis the trigger events in the markets, basis your risk profile, will tell you what you should do about your investments. So it's just not about payments, it's about investments. There are a lot of fintechs coming in this. So automatically you will be able to, basis your risk profile, the bot advisor will tell you where to invest, what to invest, sell, buy, take positions in debt, so on and so forth.
But then again, payment and advisory only. But see, the banks depend mainly lending, deposits, trade. These are the core activities of the bank. So they have very limited space if you see from a banking point of view. And again, regulation, because fintech, the banks are regulated by the local regulators. But again, the fintech, nobody knows who's going to regulate them. Some will disappear, some will emerge. So this is going to, again, I feel it's going to take a lot of time to come into a real core banking activities. And most of the fintech, they are linked to banks now. You have seen all the UPI, they are linked to bank. So their role is only just a convenience. I'm saying advisory, convenience, all these, but not real banking. Do you agree with me?
No, banking is what? Banking is
what? Lending.
Banking is about payments. Banking is about lending.
Deposits.
Banking is about collections, deposits. Okay. Now, even for startups, even for early stage enterprises, there's crowdfunding. People are able to collect money basis crowdfunding also. So they are disrupting the way banks has been doing, and banks are not agile at all. So they can't create bots and tell you that, okay, sir, this is your risk profile and therefore you should be investing here, which fintech is going to be doing. Therefore, it has to be a marriage among two. As you rightly said, you can't trust these. Fintechs are today there, not there. But I must tell you, various economies like Singapore government, even UAE governments, they are evolving new laws to regulate fintechs also, so that the adoption is more, so that people are able to use it more, and there's more trust in fintech also. But the way forward, of course, is a collaboration of banks and fintechs, because fintechs are more agile. At the end of the day, you need a better user experience. Something you should be able to get what you want to do, what you want to get. This fintech is going to give, but your trust is with the banks. They know the regulations, so therefore they will coexist. But fintech is more agile, so that, and millennials want agility. They want to, they want to do in cryptos. They want to deal in cryptos. So there are fintechs in cryptos. So therefore the answer is they will coexist, but banks are going to be disrupted. That's for sure.
Hi, good morning, Mr. Manish. Very nice presentation. I have one query. Like you're talking about fintech, is it a kind of a disruption in CA profession as well? Should we move towards IT more? A finance guy should be IT based. We should learn about this new technology. This will change the career path as well. How you suggest?
It depends which side of the stream you are in. If you are pure accountants, doing just accounting, yes, you have to change, because we at Dabur only have moved a lot of accounting positions back to India to save money, first of all. And then now, even in India, we are replacing those accountants with bots. So if you are doing pure accounting, yes, the hard truth is you have to change. My suggestion is corporate finance or investment is always going to be green. So if you want to move towards it, you should move, because there will always be markets which will be volatile. There will always be ideas. So if you move towards finance or corporate finance or raising of finance in a company, or with the investment banking that is going to give you more dividends than pure accounting. Of course, it is going to take time, and it also depends on the stage of evolution of a country and or a company. But this is the way it's going to be.
Thank you.
This was the last question. Manish is around with us. Any more questions can be taken afterwards. Thank you. A round of applause for Manish and sir.
Thank you.
Thank you very much, Mr. Manish, for letting us know the importance of digitization, specifically for fintech. So like you said, I know Dabur is using bot. So I believe for my profile, there is no bot. So big round of applause for Mr. Manish Mathur. And now I would like to invite our chairman, vice chairman, and Malavika to present a memento as a token of appreciation. It is evident with the history that rising share prices or dipping bear markets don't last a lifetime. While the highs may trigger lots of cheerfulness, the lows can bring greater gloom. And that's one of the key reasons why every wise investor focuses on their long-term goals. Downturns are always part and parcel of investing, though the question is how we can safeguard our investments in turbulent time. By diversifying our assets, or by keeping long-term goals, or by revisiting our financial goals, how to protect our money. The biggest challenge is how to do all these and to make the right approach for all of us today. We have with us our next speaker, Mr. Viram Shah, who will let us know the safe investment strategy in turbulent markets. And to introduce Mr. Viram, I would like to invite our money man, our treasurer, C. Jai Prakash Agrawal, to the stage.
Thank you, Secretary Manoj Agrawal. Before I jump on to my responsibility of introducing the speaker, I have a little more responsibility as a treasurer. It's almost a month I have not spoken to you. Today is my privilege to speak to you after a month, reason being I was on a holiday. First thing is, you have clapped a lot, you have appreciated a lot. The speakers, the initiative taken by the chapter. Now it's time to appreciate yourself. Reason being, we have touched the magical figure of 3,000 and this is the first event after we achieve, we are here. Clap for yourself because it is not my achievement. It is not the achievement of the chairman. It is not the achievement of the executive committee member. It is your achievement. You are the brand ambassador of ICI Dubai chapter and that is why we are standing at 3030 number today. Please clap for yourself. Each one, everyone, bring one and that's the reason we are 3,000 today. Thank you to each one of you from bottom of my heart and on behalf of the entire managing committee. Now, coming to the registration, today we had 2 registration counters, one from the front, second from the back. So if any one of you have not registered, please go ahead and register yourself, otherwise you will miss the CPE hours. So please do go and register if you have missed to register and directly came into the hall. That was my second. And the last one, VOCA refund. Secretary has given me a responsibility. You are getting a 50% refund. So refund will be 75 AED. The cost for virtual registration is only for virtual registration, not for physical registrations. So if you're traveling to Mumbai, you have to bear the entire cost. It's only for people who will be staying in Dubai and attending this VOCA. The cost is $40 on the site, roughly around 150. We will be reimbursing 75 AED. You have to show you have registered. It will be verified at the registration counter and then you will be refunded. So if you register today, you take that refund from the counter itself. This is my responsibility as treasurer. Now I will move on with my other responsibility of introducing the speaker. Mr. Viram Shah. Mr. Viram Shah is the co-founder and CEO of Vested Finance. The company is helping Indian investors to invest in US listed global brands and theme-based ETFs in a simple, affordable and accessible manner. Means if you have surplus funds, he is the right man to guide you. Originally from India, he has more than 3 years of experience in investment banking at JP Morgan in India, covering Asian telecom, media, technology clients. He has also worked with startups in data analytics, fintech, and machine learning spaces. So he's a technology man too. He's an avid reader, poker, and likes playing the drums and discussing politics. With a big round of applause, I will welcome Mr. Viram Shah, and his topic is really interesting. That is safe havens or safe investments which you can do around the time. Please, Viram Shah, I am looking forward to that session.
Great. Thank you for that energetic introduction. This does make you feel like a rock star, actually. So it's great to be here, and I'm not usually in Dubai. I'm in Bombay. I spent most of my time in Bombay. We just got in last night, so I'm excited to talk to you guys today. What we're basically trying to cover is a couple of things that we'll cover today. One is what exactly is happening. Like, what are these turbulent times we're talking about? What's happening globally? What's happening in the two largest democracies? What's happening in the US? What's happening in India, right? So that's setting the context a little bit. And then we'll talk about 5 very actionable strategies that you can take home and apply to your portfolio today. So, okay, yeah. So 5 very actionable strategies that you can take home and apply to your portfolio today. Before I start, I have to give my disclaimer. We are a broker-dealer in the US, so none of this is, please, advice. This is more informative so that you can make better decisions whenever you're building your portfolio, right? Okay, cool. We'll get going. Also, what I've tried to do is kind of speak the language of the audience. So a lot of it is charts and numbers. So I'm hoping that you guys find it interesting. Yeah, so this is what we want to cover today. Where are we today in terms of the landscape and 5 strategies that you might find interesting. So let's first look at globally what's happening. We face a lot of different headwinds globally today, and they're happening because of a bunch of different reasons which are very unique to today's world. First, China is still continuing to do lockdowns. They are facing a lot of COVID cases, and whenever COVID cases happen, China puts a strict lockdown, and that has led to their economy slowing down, much slower than they were growing before COVID. The second big thing that is happening is the Ukraine-Russia conflict, right? You guys all know about it. This is something that is impacting a lot of different things. Like, both of these factors are impacting a lot of different things beyond that. And what it's leading to, essentially, one, you know China, how important it is to the world supply chain, right? So it is leading to a lot of disruptions in the supply chain. This chart here is basically the manufacturing index, and the lower the number is, the larger delivery times are. So if you look at it, it's dropped massively over the last few months, which means supply chains all over the world are being disrupted because of both of these issues, right? The second thing that's happening, again, because of both of these, is food and oil prices are increasing. I don't know if you can see this, but just if you look at the trend, the first one is food prices. So again, look at the graph going sharply upwards, right? So food prices, especially because of Ukraine. Ukraine was an exporter of a lot of food. Food prices are going up significantly. And then the bottom chart is fossil fuel prices. So fossil fuel prices also going up significantly over the last few months. So these two are happening, which is leading to supply chain, which is leading to an increase in food and energy prices. And that, as you all probably already know, you've read about it a bunch of times, is leading to inflation across the world. So this chart is the surprise index, basically what analysts had predicted, but actually what inflation came in at. And if you look at it globally, the last few months, the surprise has been massive. So inflation has been more than expected, and in the US, way more than expected. So that's going to have an impact across the entire world. And then the second thing, because of inflation, the Federal Reserve or RBI has to control the policies, right? And they have to control monetary policies by increasing interest rates. So all of these red charts, they are basically all the economies that are tightening their economy by increasing interest rates. So earlier it used to be blue, which was easing, which was the quantitative easing that was happening. Now it's red. So a lot of them are basically increasing interest rates to make sure that inflation does not harm the economy a lot, right? So this is overall what is happening in the world today, if you had to summarize it. What's happening in the US? So there's this, in 1979, the Fed actually faced a very similar situation. And that time there was a song that came out at that point in time, which was cruel to be kind. It's basically you have to take tough measures to be actually kind over the longer term. And that's what's happening in the US today, where you saw all the inflation. Because of the inflation, interest rates have constantly been increasing so that the Fed can control prices. So today it's at about 2.4, 2.6%. It's likely to go up to 3 to 4%. It's not going to stop anytime soon because currently it's not under control. And what that leads to, as your cost, as your interest rate is increasing, companies are likely to borrow less. consumers are likely to borrow less, decrease in spending overall, and so that's leading to slower GDP growth. So in 2023, the forecast, the last bar is about 1% for the US, so it's sharply going down. What is happening along with this is the correction in the stock markets, right? You probably might have followed the S&P 500 or the Nasdaq, and so valuations have actually come down a lot. If you look at this chart here, this is COVID when valuations were very, very high, and now over the last 3 to 4 months, they've actually come down to their 25-year average. So this might actually be interesting times to buy, right? Even though everything is looking gloomy, valuations have come down, and if you have some investment funds, this actually might be an interesting time to buy. So that's the conclusion that's happening in the US. What's happening in India, if you want to see, right? In contrast to the world, the India stock market has actually, over the last year, performed very, very well. Everybody's down, but India has been down the least. And there are a few reasons for it. The primary one, actually, is the entire concept of our Prime Minister, which is, I've just adopted it here, Atmanirbhar Bharat, right? Because consumer confidence in India's current situation has increased. This is data reported by the RBI, has actually come up quite a bit since COVID. During COVID, it was down quite low. Now it has started increasing, and overall there is a bullishness on how India can weather this storm compared to all of these other markets. So that's one of the main things. And then the second is, along the theme of Atmanirbhar Bharat, domestic buyers are actually outpacing the foreign investors, and that's what has led to kind of the stability that we've seen, or the resilience that we've seen in the Indian markets. All of these blue lines are domestic buyers, and the ones that are negative are foreign investors. So domestic buyers have actually offset the foreign investors, and that's something that we've never seen before. So there was a very interesting statistic where in 72 of the largest companies in India, domestic investors are holding larger share than foreign investors. This has not happened, I think, over the last decade or so. So there is a lot of domestic bullishness in the market, and that's what's, again, helped the stock markets control. But on the flip side, because of this, valuations are actually a bit expensive in India. From a valuation perspective, so the black chart is India, and then if you look at the other charts, they are the emerging market indexes. Now, India has always traded at a premium to other emerging markets because we have a lot of potential, there is a lot of growth opportunities. So you typically see about a 60-70% premium to the emerging market index. But right now it's over 100%. So the premium is much higher than it used to be. So valuations are a little iffy on the India side of things. So that's something you should keep in mind. Another metric that you can look at, this is the Warren Buffett indicator, right? What is your market cap to GDP today? And if you look at it in India today, it's 94%. It was about 100% sometime back. Versus the long-term average is 75%. So it's higher than where the long-term average is, and so valuations are a little bit expensive, but not super expensive as well. So that's the overall macro situation, what's happening in the world, what's happening in the US, what's happening in India. Now, moving on to our next section, and I'm hoping this adds some value to your investing or how you think about investing. What are 5 ways you should think about adapting a portfolio to this, right? Adapting the portfolio to today's world. Before we get to those 5 ways, just one thing that I wanted to talk about is this very famous quote by Mark Twain, which says that history often rhymes. It doesn't repeat, but it rhymes. And so a very interesting chart is, if you look at the stock markets, the US markets, in over a long period of time, you will see there have been multiple times when we faced what we're facing today. Like the first time, which is on the left, is when World War I happened. The bottom chart is inflation. Inflation shot up again. It took 12 years. 12 years the market was flat. And then the Dow rallied for 500% after that, after the years of that inflation. So if you weren't invested then, you would have missed that rally. The second time, World War II, 12 years, again same story, inflation shot up, market stayed kind of flat, after that another 500% rally. The third time, this was a much longer period, so you had to be very, very patient during this. 18 years, Vietnam War, the markets were flat for a long period of time, inflation went up 200%. But then the largest rally, 15 1,500% in terms of the Dow going up, right? So again, if you weren't invested then, you wouldn't have benefited from this rally. And the last one, which has been the US Afghan invasion, again flat, and after that we have seen the last rally, right? We've seen until now how the prices had gone up, and again you would have missed that if you weren't there. So the conclusion or the point that I'm trying to make is this has happened before, it's not new, but if you're going to not invest, you're going to miss out on the rally that typically follows in a high inflation environment. Because it will change. It will change over a period of time. We just don't know when. Is it going to take 18 years, 12 years, 8 years, 5 years, 3 years? We don't know. So that's the takeaway. Okay. So 5 strategies. The first one, which I hear a lot of our customers talk about is, I have sold all my positions, I'm sitting on cash now. And I'm not sure what's going to happen in the market. I don't want to buy anything new. And so most of my allocation is to cash. First and foremost, that is not a good strategy. Because I don't need to tell you guys, you are very familiar with how inflation eats away your returns, right? If you're just holding cash, so today your inflation rate, if you look at it in the US, is about 2% right now. 8%, sorry. That cash, $1,000 of cash, is going to be worth only $928. So you literally didn't do anything and your cash fell down in value. If this happens over the long run, you are going to lose a ton of money by just holding on to cash. So this is not the best strategy. What you have to think about is how do you invest in this kind of environment? Not just, I'm going to sell all my investment and just sit on cash, right? So this is important. What you also need to keep in mind is, so if you have a short-term cash requirement, that's okay. But this is only applicable to your longer-term thinking, how you're thinking about long-term investments, wealth building. To that strategy, cash is not good. Short-term, if you have any goal, then that's fine. That's fine. You need cash for that. So that was point number 1. Point number 2 is that point number 2 is that basically high dividend yielding companies or high free cash flow companies are actually very, very good investments in such an environment, right? Because what they do is they're able to generate cash from their own business. They're not reliant on money that they need from investors or banks, which then faces higher interest rates. So if you find businesses that have high free cash flow, this is the time to want to invest in them, right? Because they don't need to depend on high interest funds, raising money at high interest rates. They have steady cash flows, so their risk is reduced, and also they would offer you dividend returns, right? So it's not just price returns, it's also dividend returns that you can get. Why I say so? So this is backed by data, right? Look at the first chart, or look at the first line. That's a bucket of high dividend yield companies versus the Russell 2000 and the NASDAQ over the last 1 year. High dividend yield companies have done much better than even the NASDAQ index or the Russell 2000, right? So because they have this cash flow generating capability, investors value them, and which is why they're able to sustain their price return. So this is another strategy that you can think about in your portfolio, review it. Are companies that you're holding strong from a cash flow perspective? Are they high FCF companies? These could also be tech companies. Not necessarily tech doesn't generate free cash flow. There are a lot of interesting tech companies that are able to generate free cash flow from their business. Like SaaS companies, for example, that get paid subscription, right? Very repeatable revenue business model. So yeah, this is something that you can look at. This is the second thing. The third thing that I had in mind was, in these times especially, when you think about a portfolio, we typically think about, okay, 50% equity, 50% bonds. But alternative investments actually can help you mitigate your downside risk. Now, alternative investments, the ones that I've covered here are just 2, but I mean, you could add crypto to it or things like that. But there are 2 primary ones that you could consider. One is if you have access to hedge funds, right? If you have access to hedge funds which offer you different strategies, a couple of them that I've listed here that work well during turbulent times. One is a macro strategy, which basically looks at global macro situations and adapts their investing according to that. And then the second one is relative value, which basically identifies arbitrages in valuation during turbulent times and helps you protect against downside. So if you have access to hedge funds, this might be a good diversification tool for you. And then the second thing for the long term is private markets. Basically, I mean, startups like, not saying you should invest it, but startups like us, or investing into later stage companies for the longer term. Private markets are something that also help you de-risk your portfolio from the equity and bond markets, right? So again, that will help you manage your returns over the longer period of time. And so this chart here it is specific to hedge funds, but it will show you in the down markets, hedge funds only capture 21% of the downside. So basically, the markets went down a lot more, but hedge funds helped you reduce the impact on your portfolio. And this is the up capture, which is if the markets are going up, the hedge fund doesn't return the exact market rate, but then 50% of the return is given to you. So the downside risk is protected a lot, whereas the upside risk, you lose some of it, but it's okay. It helps you give that diversification in terms of managing your returns. So that's number 3. Fourth is you need to build a resilient portfolio. In times where the markets are very, very volatile, you need to build a resilient portfolio. And the way to do that is, and you must have heard it from a bunch of folks, is diversification, right? Diversifying into multiple assets over time. And so here is a very interesting chart of how in 2022, all of the different assets have done. And you can see pretty much everything is on the left. Like everything has not performed well. And commodities is a major outlier on the positive side. They gave like 30% returns. So if you had some allocation in commodities, you would have actually fared much better than, let's say, if you had all of your money into equity and bonds, right? So that's the importance of diversification. You need to have some money allocated in different assets. Again, one more interesting data point, and this is an analysis that I found, which is, let's say you invested into equities, fixed income, real estate, and alternative assets, or you created another portfolio which has 50% equity and 50% bonds. The 1-year return for both over the last 1 year would have been much different, right? 5% return versus a 0.6% return. With the last column, which is the Sharpe ratio, which you guys already must be knowing, is risk-adjusted return, right? Like how much risk am I taking to get a certain piece of return? And risk-adjusted return for the diversified portfolio was much higher than, almost 9 times higher than your equity and bond portfolio. So point that I'm trying to make is diversification is important to build resilience in your portfolio. Don't ignore it. The assets that you could look at to diversify are primarily these 6. I mean, you could look at a bunch of different random things, but primarily these 6 are the tools that you have to diversify your portfolio. And so you have equities, you have bonds, you have real estate, commodities, gold, and alternatives. Now, it might seem daunting, how do I create a portfolio with all of these different aspects in my portfolio, right? And so this is where actually we talk a lot to our customers and educate them in terms of how the US markets, which are very developed, right? They are the largest markets in the world, about almost 40 trillion in market cap. They give you easy opportunities to get 5 out of 6 into your portfolio very easily. So you don't get the alternatives bit, which is, let's say, private markets or hedge funds. But if you want gold, if you want commodities, real estate, you have bonds, equities, all of this through ETFs, you can get easy exposure. Today, sitting here, you can build a portfolio which has all of these. Like, for example, on our platform, we have a pre-built portfolio, which is an all-weather strategy that includes commodities, stocks, bonds, and gold. It's what Ray Dalio, the very famous hedge fund manager, he recommended as an all-weather strategy, right? Irrespective of inflation, rising interest rates, falling interest rates, this is a portfolio that you can rely on. And so what I'm saying is you can easily create these diversified portfolios by just holding ETFs in the US market. So that opportunity today is available to you. Okay, last point that I want to make, and something that, again, you can think about in terms of the strategy, is that dollar-based assets are actually doing pretty well. In this kind of an environment, the US dollar is strengthening. You must have seen against the rupee how it has strengthened. It's not that the rupee is weakening as such, it's the dollar that is strengthening. That's what's changing the dynamic. And so the dollar index actually has gone up significantly over the last year and still likely to strengthen further, right? Because in a volatile market, people are likely to look for safe haven assets. They're likely to look for the safest debt that is available today in the world, and that is in the US. So safety of the US dollar in face of geopolitical uncertainties, emerging economies where a lot of the money came in earlier, it's still coming in, but also investors are looking at USD debt because the interest rates are much, much better now. And apart from India, other parts of the world are not doing that well. So other parts of the world are still struggling. Europe's struggling with energy. China is facing all of these lockdowns. Japan is struggling to increase interest rates. So the US dollar is actually positioned very, very well for you to be able to take advantage of that. So, okay, I think that was all I had. I hope that helps you. What we do is we allow folks to invest in the US markets as As was mentioned earlier, we are a fintech that allows investing, as I think Mr. Mathur mentioned, and we do instant account opening. We've already been in India. We have almost 2 lakh customers there, and we have a bunch of folks in UAE also who are our customers, and they have been using us for a while. Just a quick plug there. And happy to answer any questions related to investing, startups, anything that I can help with. You can use this QR code and sign up and get a $30 bonus if you want to start. We are also doing a program for CAs specifically where we are partnering with them if they want to provide international investing opportunities to their customers. So we are outside if you want to talk about it. It's a very interesting opportunity. And yeah, I think that was it from my end. Happy to answer any questions if there's still time. Yes. Mike.
Hi.
Oh, yes.
I have a question. So, your historical charts shows that there has been recession, but you stay invested in the stock market, and you're saying don't be on cash. But this time, recession is for different reasons. I think there's a failure at the political levels. They are not able to solve the political problems, which is leading to this inflation. And therefore, economists are being told to solve this problem by raising the interest rate, increasing the interest rate, and suppressing the demand and the growth. So if the recession comes, which is most likely going to come next year, you don't know how deeper this recession will be. And therefore, it is the right time to take positions, or it can plummet more. So sitting on cash is just not a hedge against inflation. It's also waiting for the right opportunity and then invest.
Yeah.
And in the context of India, the inflation is tamed. And the interest rates are around 7.5%, 8%. So I think it's one of the best time to take position in debt. And with inflation of less than 6%, interest of 8%, you can take some positions in debt also. And that can be a hedge, and you can wait for the opportunity to take positions when you know it's almost the bottom, because we are living in many uncertain times now than we were in the history.
Yeah.
So your take on that?
It's my own personal take. It might be wrong, right? I don't know. I think if you look at all the things that happened in history, right? At that point in time, everybody must have felt that it's happening for the first time, and you don't know how it's going to change. So that's one. Second, if it's possible to time the market, and if somebody's doing active sort of monitoring and saying that, okay, this is the right time to enter, then holding cash and entering is the best thing to do. But what we've seen for the majority that works is very difficult. And they might not have the expertise that probably the room has or you would have. So for them, it is essential that they continue investing irrespective of how the markets are going, but with a strategy that is built for this kind of time, which says that, okay, if bonds in India are a good strategy, then have some of that in it, but also have some diversification via, let's say, real estate or equities in the US or globally what equities or India equities, and build a sort of a resilient portfolio is, I think, what I would say. Yeah. Yes?
Yeah, I had a question regarding your outfit, basically. So you are a platform which manages funds.
Oh, I thought outfit. Okay, yeah,
you are a platform that manages fund, like wealth advisors, for that matter.
Yeah.
That is question number one. And I just wanted to add something to what he said. There is an opinion that US is already into recession, and it's going to be more painful because the regulators are saying that it's still to come and etc. But we are not going into that. What I'm trying to say is, you have rightly said that the dollar is continuing to strengthen, which means there is more pain for the equity markets. The bears have already have the ball. So I think it is better that we watch and wait if it comes to equity, but diversification is a good call. So that's the reason why I'm asking you, is whether you are advising on managing funds, how do we get to, join you as a platform? That's the basic question.
So we do a couple of things. We don't do pure play advisory. Our platform is actually just meant for easy access. So you can come in, if you have your own strategy, you can come in, place trades. It's no commission charge or anything like that. What we do provide in terms of advice is some of these pre-made portfolios. So we have a portfolio, let's say, follows Ray Dalio's all-weather strategy that I was talking about. So we have 10 such portfolios as a multi-asset strategy. So we don't do man-to-man advice. Our license is essentially as an online advisor. So we do these pre-built portfolios that individuals invest in. So about 20 to 30% of our volume on the platform is into those portfolios, and the rest, they do their own research and come and buy. So that's how we are structured today. Yeah. Yeah.
For NRIs, what is your advice in this situation when the dollar is giving a better return on debt and Indian markets are performing very well? So, otherwise we'll have to have all the funds, dollar, rupee and all, and then you do a really big investment. So as NRIs, we are confused.
Yeah.
So please help us out. Where do we, one side is a performance, other side the dollar is giving a better return.
Yeah, I think it's the same for not just NRI, it's the same for resident Indians also now, because you have this opportunity from India to invest internationally. So what we always tell people is, see, majority of your portfolio is going to be India denominated, right? You are going to have, let's say, 50, 60, 70% of your portfolio in India. What people have missed until now is 0% international diversification. That shouldn't be the case. Yeah, you should have at least 10, 20% diversified internationally to get that dollar return, right? For example, now today my portfolio is down about 10%, but the rupee itself is down 7%, so I'm net down only 3% in such a market, which is not bad, right? If I didn't have that, then that entire concept would have, or the diversification was something that I would not have gotten. So the point is, most folks don't even do that in the first place. So if you've not done that yet, I think 20 to 30% of your portfolio diversified internationally in terms of equities is something that is something that we always tell our customers that that's a prudent way to think about it. Hope that.
Hi, I have a question here.
Yeah.
So there's a school of thought which says this real estate, investing in real estate and in the property market is over. There's not going to be any returns in it. You rather be liquid and stay invested in other places like metaverse, all these things coming into picture. How do you think the investing in real estate market would yield?
Yeah, I have no investment guru to answer that, but I think where that comes from is is specific context. Like if you're looking at, because real estate is a very localized play, right? If you're looking at real estate in Mumbai, it's very different from real estate in Surat, for example. So it's very difficult to paint a broad-based stroke and say real estate is not going to give you any returns. Like if you look at the US REITs, for example, which you can invest in via ETFs, they give you about 4-5% dividend yield year on year. So that could be a real estate investment rather than actually just buying property and then trying to get rental yield in a particular location. So I think that's the outcome. You should have some allocation to it. Physical property or not, which we've traditionally done all our lives, might be something that you want to question. Thank you.
It's really a fantastic session. Thank you very much, Mr. Viram, for letting us the right approach and strategy to safeguard our investment to be adopted during turbulent time. Let us have a big round of applause for our speaker. I would like to invite our chairman, vice chairman, and CA Jayaprakash to present a memento to our speaker, Mr. Viram.
Viram, before we go ahead, is it something you have done the safe name play from Vikram to Viram? You have done the investment on K, something like that?
Everybody usually defaults to Vikram, but then I have to correct them. Thank you. Thank you.
May I request all the ExCom members and speakers to join us for a group photograph. Crucial part of the session. Can we define the payments and what is the main purpose of the payment? Payment is a barter agreement where recipient of goods and services settle their dues with the providers with all modes of payments. So what is the key objective is to ensure that payment should be settled in a safe, quicker and efficient way by continuing the trust factor for all the transacting parties. We have seen that trust factor remains same, though the differences are primarily due to change in technology and the way we settle the dues. In the old and the golden days, payments were settled by exchanging goods or services. We call this as barter. And then came cash, followed by check with credit. And today, modern era, it got replaced with online or by a digital way. To understand the differences in traditional and new payment channels, today we have with us our guest speaker, Mr. Mohit Eri. And to introduce Mr. Mohit, I would like to invite our Vice Chairman, C. Harikishan Rakawat, to the stage.
Thank you, sir. Ladies and gentlemen, good morning. Before I introduce, I would like to understand, because Mr. Viram has already told us about US investment. So, can I ask you, how many of you have invested in US market? Okay, great. I think there are maybe 10% of the people have invested. And how many of you have made money out of US market? No, sir, I can see only 5 out of 10. So what happened? 5 have made money and 5 have lost. So nothing has happened except changing the hands. That's what has happened. You know, the stock exchange, even they have the pay-in date first and then payout date. So they collect the money from you and then they give it to another group. That's what is happening at the end of the day. Nothing is rising, nothing is falling. It is just change of hands. So ultimately what is happening is haath le aur us haath de. Friends, we chartered accountants are great financial advisors to our employers and clients. We prepare annual budgets for them. Then we look at the actuals. We always track the performance by having variance analysis. We always suggest the business to take corrective action. There are a lot of budgetary control, like rolling forecast, and we are doing a lot of planning and then advising the management. But when it comes to us, we don't do any planning, unfortunately. We don't prepare any budget for us. We don't look at our spending, what is happening. And even our investment, we just invest and forget it for the life. That is what is happening. So I request all of you to take into account that we also need to control our budget. It's good that we take care of our employer, but take care of us as well. क्योंकि दिया तले अंधेरा होता है ना कि अपन दूसरों की हेल्प करते हैं बट अपनी खुद की हेल्प नहीं करते हैं. Today our first 3 speakers, they have shared with us their ideas and mantras how to save money, invest and achieve financial freedom. My mantra is simple, and I advise at least all our young chartered accountants to take care of only 2 initiatives. Number 1, go for the critical insurance policy, because UAE is very, very expensive in terms of the healthcare. And number 2, always start investing from your young age, at least maybe 50% of your salary, whatever saving you have, at least start investing in the mutual fund. That will become a huge saving for sure. And I have witnessed myself, I started late, but that has really, grown like anything. And then we don't have to at least look at it or review it. Just invest it and continue investing, because then you will make money whether market is going up or down, doesn't matter. That's my another piece of advice to all our youngsters. And now let's discuss our next and last speaker's topic, understanding traditional and new payment channels. Technology and the new digital era have brought a major transformation in all the sectors of the global economy, including the financial sector, which has given rise to fintech, and we have discussed. This is a concept which summarizes the blending of technology and finance and covers a wide range of areas such as payment methods, alternative financing, personal finance, wealth management, digital banks, cryptocurrencies, insurtech, etc. I think Viram has not talked about cryptocurrencies, but anyway, I'll leave it to you guys. And there are a few examples of traditional payments which you are aware: cash or check payments, credit card, debit card, and cash on delivery. We'll get to know more about these from our last speaker, Mr. Mohit. Friends, I am privileged and honored to introduce Mohit Eri, Regional Director for Product Management at Mastercard. He leads the payment gateway services across Eastern Europe, Middle East, and Africa region. In this role, he works with banks, merchants, fintechs, payfacs, and PSPs across industry sectors such as government, retail, telcos, hospitality, and airlines in enabling acceptance of digital payments. Mohit has over 19 years of experience in the financial industry across strategy, marketing, sales, delivery, customer, and product management disciplines. He has keen interest in the emerging technologies that can enable our ecosystem in their digital transformation journey. Prior to joining Mastercard, Mohit has worked with Amex, NCR Corporation, Atos Worldline, Mashrak, and Network International. He has worked across different geographies and enjoys learning from working in multicultural environments. Could you please put your hands together to welcome our learned speaker, Mr. Mohit Airy.
In our day-to-day life, we struggle to find 30 minutes of time with CFO and their finance team. And to get to this platform where we have so many audience who's given us time since morning and next 40-45 minutes, it's truly privileged to have this honor to come and talk to you about what's happening on the payments world and how we from a Mastercard side is enabling all the technology for our key customers. We've gone through multiple sessions. We started off from my colleague who was talking about the issuing side of the business, and my focus is to educate or give you more knowledge in terms of what is happening on the acceptance. So when we talk about the cards, when it's being used for the payments, it improves your working capital. But unless you have a payment infrastructure that enables to accept the card, the entire ecosystem doesn't get completed. And we also heard CA Anurag talking about the history of cards, how it all began from diners to Amex and Visa and Mastercard. And when I started my career, I remember merchants used to wait for at least 7 days to receive the payments. And we used to use a paper-based zip-zap machines, which were given to the merchants. They used to fill up all the information related to card and send it to the bank. Bank used to reconcile and ultimately transfer the funds into the merchant accounts. From that time onwards, we have now moved to the entire digital era. And thanks to COVID and pandemic for last 3 years, the e-commerce growth has been tremendous, not only in UAE, but all across the market. So I'm going to spend a couple of slides in terms of talking about what are these key trends and how the technology that we are enabling helps our customers to take the advantage of what we are doing for the industry. I think one more point that we would like to clarify, while Mastercard is very much associated with the card issuance, but that's not the key focus. We are essentially a technology company. We provide technology to our partners, which could be the banks, merchants, the governments, who uses our technology as a rails to process the entire payments. So we are very much present from beginning till the end, and we have to be, thankful to our banking partners who take our technology and then bring it to yourself to make it for the use. If you look at it, from a key trends that has happened is right from the point where you talk about the customer experience. So we know that the payments needs to be accepted. Primarily, the original focus was only in the stores, but now the experience is to offer a means where you can see the customer touching not only your stores, but also the e-commerce, and how you see a single visibility of your customer who is going to your shops and making a payment. So this is where we will talk about some concepts that we are bringing out in the market, which cuts across multiple channels. So whether I'm using an in-store experience or I'm using an online experience, you will be able to touch the same customer and understand the behavior, and some data analytics and insights would be provided to make a better use of the entire technology. The merchants and the business, they are becoming more and more global. So earlier used to be one market focus, now you're expanding into new markets. We've seen businesses growing not only just in Middle East, but globally. So the cost increases, and we're going to talk about how we bring in efficiencies in the entire cost, where the technology which is adopted is in one market can be scaled into different markets. And then as we as we pump in a lot of e-commerce transactions, we also need to make sure that the security and the risk is protected. While I'm there in the store, I'm quite confident that when I'm presenting my card, I'm the actual user of the card. But when I'm talking about a card not present world, the e-commerce world, I need to be extra cautious and extra careful while processing that payment. So the technology needs to give you those rails to ensure that your fraud and risk is ultimately protected. And then by using the cloud infrastructure, how you can actually scale the entire payment ecosystem. We'll talk about the payment methods. I mean, the basics are the credit and debit card payments. From here, we are seeing the current trends where we are introducing more security by using some technology like EMV 3DS. I'm going a little bit technical, but it's important to understand why we are doing this and what are these concepts they do for processing the entire payment. EMV 3DS is nothing but a mechanism where you authenticate your customer. So when I'm not present in front of you, you need to throw me a challenge that I can prove that I'm the actual card holder and I'm using that card for making a transaction. So I'm sure most of you would have done some sort of an e-commerce transaction. So you always receive an OTP from your bank to authenticate. So this is nothing but what we call it as a 3DS authentication, where I'm from the issuer side authenticating that I'm actually talking to the actual cardholder and the person is present on the other side for making a payment. From here, we are dwelling further in order to remove certain friction. So what we've also heard from the merchants that while they want to protect the entire experience, these experiences are creating a lot of friction. And when we talk about different segment of customers, some of them are very comfortable in terms of using a technology while some are not. Like for example, if I talk about my parents, they wouldn't be so comfortable to even go to an ATM and withdraw cash. And here we are talking about giving them an online experience. You're going to either a merchant website or accessing a mobile app and then entering the card details, etc., etc. Now, what we do is with some technologies, we will remove those number of clicks which are required to complete the entire shopping experience. And this is something that you will see as we go further down. And then there are new emerging trends where merchants are asking to provide a single interface not only to process my card payment, but also to access my bank accounts. So there are a couple of pilots which are happening around the world where we have enabled the bank account transfers. So today, I mean, that's the most comfortable channel where from a CFO side, you will see that it's a minimum on your cost line. And this is where when we provide your technology, it is cutting across multiple acceptance channels, which is not just accepting credit cards, but also your regular bank transfers. What we call this as an open banking. And this is what we successfully launched in UK along with Lloyds Bank. And if you are obviously going and doing any shopping on a merchant, so you can select to make a payment by your card or by a bank account. And this is something that we keep on evolving. Biometrics is a new form of payment where you link your card to your profile and you don't have to enter your card details again. This we successfully tested at the time of Expo. When Dubai Expo was going on last year, we had a booth along with a partner called Pepsi. So I'm sure most of you would have got a chance to see that booth. So when you walk into the Pepsi booth, you're actually not presenting any instrument for making a payment. It is linked with your biometric profile. So you enter a shop, you select what kind of products you want to buy, and when you check out from the booth, your link profile on the card is automatically detected and the payment is taken from the card. So this is obviously the future, and we are again making sure that technology is there to help our partners to adopt the new payment ecosystems. And then lastly, when we talk about whether the acquirer or a merchant or a PSP, they're looking for a technology gateway provider who can help them to reduce the entire investment. From the issuing side, we saw how you can make more money in terms of getting rebates from your banking partner. But when we talk about the acceptance infrastructure, the CFO usually sees this as a cost line. And this is because the banks are passing on all the cost of the infrastructure that is required to give you that seamless experience is distributed amongst the customers. And when we talk about the technology, it's being used globally. So hence, we are able to give you the economies of scale. Again, reiterating the fact that we work along with our banking partners. So we have got multiple banking relationships, not only in UAE, but across the world, who's using the technology to come to the customers and giving you the platform to process these payments. This is where we go into the actual technology solution, where Mastercard has been working on this technology for more than 2 decades. And we have invested heavily into the entire infrastructure, wherein the acquirer or the bank partner who's actually releasing the entire technology to yourself as an entity do not have to do any investment on their side. So typically when you get a POS terminal in the store, you have to pay for the infrastructure, you have to pay some rentals, you have to pay the processing fee. Here, what we thought, this is something that we need to invest as Mastercard, and it benefits the entire industry, and not in just one region, but across multiple regions. So we've got the investment which takes care through 4 data centers that we are operating from, and we have processed more than 6 billion transactions through our platform. We've also invested in the customer support journey. So when you face any issue, you have any support requirements, we also make sure that we come in and we provide the necessary support to our customers to address any questions, whether it is related to the integration or any post-implementation support. In terms of the payments processing, so while we are Mastercard, but the technology that we offer is capable of processing all different form of payments. So starting with our own brand, which is Mastercard as a scheme. Then we also accept Visa, Amex, Diners, China Union Pay, some of the local form of payments. So for example, in India, we have RuPay. So RuPay is already supported on the rails. In the local region, if you go to Saudi, MADA is a prominent brand where 80 to 85% of the transactions are happening through MADA. So this is already live on the payment gateway rail. And all these instruments, what you see over here, can be enabled through our payment gateway channel. And this list will just go on increasing. You talk about the traditional, which is Visa, Mastercard. There are digital wallets which will keep on adding. So if you're using your Apple Pay, Samsung Pay, Google Pay wallets, those are also supported on the technology rail. So this is where I was again like to focus, where we invest in the entire infrastructure. You don't have to do anything in terms of the setup. You don't have to invest in your data center or your platform that you have to buy from some vendor and run the application. So we are doing all the services on behalf of our customers, and you get it through the acquirers. How does the entire transaction work? So in our world, we call it as a 4-party model, where you have 4 different parties, starting from a consumer to a merchant, to the acquirer, and to the issuer. And our role is to connect all these 4 parties end to end. Right from when the card is issued and the consumer is trying to make a payment at a merchant location, we come in between, and we obviously interface with the merchant's products so that we get the card information. We process that transaction through our rails. And as I mentioned earlier, we not just provide the rails to process Mastercard transaction, it can support different transaction for multiple schemes. Every transaction is processed in 2 legs. So the first leg is the authorization layer, where the transaction is directly processed from our platform, and it goes through our rails to the issuer. The issuer checks whether the card has the available funds, it approves the transaction. And the second piece is the settlement. So we provide a daily settlement and a clearing file to the acquirers, who are then obviously working along with the merchant to make sure these payments are processed on a daily manner into your account. And this is where the entire ecosystem, when I mentioned earlier, from paper-based to the technology has now evolved. And from a merchant point of view, you're getting these funds directly from an acquirer. The entire transaction flow is built in a way that we are also not violating any regulatory requirements. So if you look at the local UAE regulation, the central bank says the entity who's allowed to hold the funds is always a bank, which is an acquirer. So we make sure the funds are secured with the acquirer, and they are the people who are doing the daily posting into the merchant's account. So we are still running the rails, but we are not interfering with what the acquirer needs to do or what the central bank needs to do. So to summarize, when you get the technology from an acquirer, we provide easy integration methods. So there are methods which will help you to integrate with the payment gateway a lot quicker. There are different norms that we have to comply with. Again, not going too much into the details of the technicalities behind. There are certain standards like PCI, Payment Card Industry Standards, that we need to follow. Some of the merchants, they are quite sophisticated. They have their own big, large IT team. They can manage the card security on their own. But some merchants, they are running single shop and they may not be familiar in terms of what are these standards and how do you protect the interest of a cardholder. This is where, again, our technology comes into play, where we provide the hosted payments. So here, when I'm doing a shopping, I'm on the Amazon website, I'm building my cart. When I'm going to the checkout page, I replace that page with a hosted page that is coming from our platform. So this page is now responsible to accept the card details and process the transaction. So I take the ownership from a platform point of view, where I secure that message right from the time when something happened? Okay, it's back. Right from the time where when the card details are entered onto the merchant website and processed by the gateway. And this is where we reduce the liability on a merchant to invest into their infrastructure. So these are different type of the hosted payments that we offer. One is called hosted checkout, the other one is hosted session. Technically, they are the same, but we are taking control of the merchant website when we processing the entire payment. The rest are, again, at a concept level. I'm going to dwell a little bit deeper, so I'll just move on and talk about as we come to that. So EMV 3DS, tokenization, and card on file, or click to pay. I'm sure most of us would be using apps like Uber, Netflix, or Amazon, for instance, where these apps are prompting us to store our card information. So when I'm providing the card information to these app providers, I need to be comfortable enough that my data is stored securely. So what we are doing here, we are covering two aspects. So one aspect is where you are making sure the security level is intact. I'm not offering any room to a fraudster to hack into my system and take the card details. So that's the outer layer of EMV 3DS that we spoke about earlier. The second is where I'm storing the card information on behalf of a merchant. So some merchants may have the capability, again, to have the vault where they're storing the card information, or in the background, they're using the same technology to create tokens for every card that I'm entering. So what happens, the merchant will never see the actual card information that has been entered on their website. It's been immediately replaced by a pseudo number, what we call it as a token. And this token by itself doesn't have any meaning or any purpose unless they come with some encryption standards. So the encryption is built into the platform, where from our side, we make sure that the message is decrypted and is passed on to the issuer for the authorization. So this is how the security is taken care from the concept of card on file perspective. So whether you talk about Amazon, Uber, they are using some sort of a tokenization mechanism in the background to make sure that your card information is protected and nobody is able to hack into their platform and get your card information and misuse that information. The other piece is when we talk about the friction at the merchant website, the number of steps that I need to follow to complete the transaction. And we have invested in terms of making this guest checkout experience better and better. And this is what we call it as click to pay. Similar to if you are using your Apple Pay or Samsung Pay as a device, where I take out my phone, I know that there are certain card information which are already stored, and I'm at the merchant location. I do the Apple Pay, I have a list of profiles of the card to choose from. So this is working in a similar manner, where we work with both issuers and the acquirers on the enrollment. So there are multiple ways of enrolling the card. The third is also through a merchant, where I create a unique profile for every customer with their issuer or through the acquirer. where we are using certain fields like your email address. So as soon as I enter the email address, that email address is linked to certain card profiles in the background. And this information is coming directly from the issuer. Now, when I talk about the previous example where you're using multiple apps like Uber, Amazon, or Netflix, you have to store your card information with each of these service providers. The difference in this experience is you no longer have to store your card information with these app service providers. The issuer themselves has tokenized your card information and has linked to a unique identifier like your email address or mobile number. Mobile number is mostly transferable, so we don't prefer to use that, but email remains constant with every profile. So as soon as I enter my email address, if you see the next experience, you will see that the cards that I have stored with my issuer automatically comes up. This is where we remove the first friction of doing the checkout when I've selected my goods. So I no longer have to get up, find my wallet, take out my card, enter 16 digit. Sometimes I make a mistake, I don't enter the 1 digit right, the transaction gets failed. And a lot of CFOs then complain that I'm seeing a lot of transaction failures because I'm seeing do not honor. This is because I've not entered my card information properly. Now with this experience, I no longer have to do that effort of entering my card information. The card information is already stored. It automatically pops up on the merchant. Now, irrespective of which and who that merchant is, as long as I'm able to enter my email address, the profile will pop up from the issuer side. I just go to the next screen where I receive a confirmation message. I proceed and do the checkout. Now, there are multiple scenarios. Here, what we've also taken into account is the type of devices that a customer is using. So when I'm doing an online shopping, I'm typically using the same laptop or my same mobile device, right? So it's extra information that we collect in the message format. Again, not going too deep in technology, but all that information is passed on to the issuer. So the issuer understands when a customer is doing an online shopping, it is coming from the same device. So tomorrow, if again, I'm switching my device and I go to a new phone that I've bought, then what happens? You still get prompted with some sort of a challenge, right? So that's again to make sure that your identity is verified. Your card information is still secure. Nobody has taken those card information and trying to use that particular information from a new mobile device or from a laptop to perform a transaction. This is where the challenge is again thrown to protect the security of that particular transaction. And then once you have authenticated yourself on a new device, that device gets registered. So you have multiple devices that can be registered and checked before the transaction is proceed. So once you again authenticate yourself, you'll be able to see the registered profiles for that particular account. You can select the card and just continue the payment. So this is all the new checkout experiences that we are working in our market. We have merchants like Etisalat, Emirates, Dubai government who have already adopted the new checkout experience. You will see that there will be a new logo sign like this that will appear. So if you see this sign, this means that your profiles are already stored with the bank and you can select from the pre-stored card information. We also have a solution that we offer to the small and medium enterprises. This is again coming from our experience when everything was under lockdown. We saw the big businesses were doing quite well because they were able to adapt. But for SMEs, because they don't have the necessary technology to go online, we do have a solution that we give you the basic wireframes to upload your product information and go online. This is where we've created a generic app and it does multiple things. Right from first of accepting the payment, you can also link it to the card that is used for making a payment. This is what Deepika spoke about earlier. So if you have a card issued from your issuer and you want to make your supplier payment, even that part can be linked into that app. So right from the acceptance and also making a payment to your suppliers is all possible by using this white label app. And this is something which is today offered by Ragbank. If you would have seen, they have this today live on the SME solution where you take the app, you just upload your products, and you're good to go. So you don't have to do any integration because everything has been done by the same technology that we have enabled for our customers. For some of the merchants who are operating in Africa, they also use this as a tool to understand the customer behavior, where you see a micro lending as a big business. So I can understand what is my cardholder's behavior and whether I can give them a lending. So this again happens through some of the platforms that you see, which we have integrated our various assets from Mastercard to give you the ability to underwrite the customer, understand what is his credit worthiness, and give them the option to have a credit before they make a payment. Sorry, yes. So as I said, acceptance solution do have a cost line, but we have to work through your preferred banking partner. So what is the pricing policy that they have adopted and how they're offering the entire solution to the customers? But generally in each payment or each receipt there will be some charge. Correct. So there will be a transaction processing fee. Today, I mean, if you're getting a POS terminal or an e-commerce proposal from the acquirer, they will have a rate that will that they'll be offering you to process the entire payments. Sure. It again depends. I won't be able to comment because, as I mentioned, we don't commercially engage with the end merchants. It is a role that we would like our acquiring bank partners to play. But then different markets have different pricing structure. So it ranges anywhere from starting from 100 bips to goes up to 250 bips on a transaction. And then again, depends on the merchant profile, whether it's a high risk or low risk, the bank's policy, they may add more charges onto that. As I mentioned, so when we talk about the e-commerce transaction, the security is of paramount. We do hear about how do we leverage the artificial intelligence. This is one of the concepts we heard when Mr. Mathur was talking in his session, how from a customer side, you can reduce the dependency on an individual. So in a typical environment, you will have a risk team within your organization who are managing the fraud. But as we progress and the number of transactions increases, it becomes humanly impossible to keep on investing into the current infrastructure, which is purely rule-based, to understand a risk profile and take a decision on a transaction. So here what we have done, Mastercard in 2017, we acquired a company called Brighterion, which has the capability of building a lot of data models in the background. So the models are created by using some data structures that has been collected at the industry level. Then we also customize the data models at a regional level by collecting the information from the acquirer and from the merchant. So the AI is the artificial machine learning which is working in the background, which will create certain profiles for the customers. So if you see over here, we will collect the data and we will start creating a good profile versus a bad profile. And every transaction, when we are processing through our rails, is being scored against two different models. So one is obviously the model that is being created by artificial intelligence, where you're processing the transaction against a good or a bad behavior. So you get a score against the model that is being created. And then the rules. So there are capability of even configuring certain rules. For example, if you're a merchant and you want to restrict all transactions coming in from Iran or from any other country which is under compliance. So you can do those physical and the rules will allow you to restrict those transactions. So together with AI score being generated from the platform, the rules configured from a policy point of view, you are able to then assess every transaction, whether it's risky or it sees some anomaly coming in or it's a normal activity, and then you are able to take the transaction forward. The tool also gives you the capability to see different type of status, whether it is accepted or rejected, what are the rules that is being configured, and then through a Tableau, you're able to see how many transactions were totally approved or declined. The last section is, again, focusing just on the cost. So when you receive a terminal from a bank to process a payment, we know that the terminal is a high cost and the transaction cost is also very high. What we have introduced, and it's been already live in our market, is what we call as a tap on phone solution. So here, what you're going to see, there is a video coming up. Any Android device that is offering you an NFC capability, we have taken that Android device and built an app that is connecting to our technology of processing the payment. And you convert that Android device with the NFC capability to become a POS accepting device. And this is where you reduce the hardware cost, where you don't have to buy a full-fledged POS terminal from the bank, and you can have your, maybe the delivery boys who are going and running the deliveries, they can upload the app and they can use that app to process the payment. I'll quickly skip, this is the background that I just shared. Maybe I just start the video, which will explain you the process. So, as you've seen, so you don't need a full-fledged card machine any longer. You can simply convert any Android device. Apple was not supporting, but recently they announced in US, Apple has also started opening the card contactless payments through the Apple devices. We all know Apple is much more higher on the security. My colleague Bhavan is laughing because he's from security and compliance. So it's not our limitation, but it is the industry. What industry allows us to use, what are the tools which are available. So very soon, Apple will also open up different markets where we can also just have a similar app on an Apple device and also use Apple phones to accept payments. But right now, this is only on Android. Yes, it is available. So with Mashreq, which is now NeoPay, they're doing this with DHL. And then there are other merchants like Talabat, who goes and collects cash on delivery. So our competition is mainly against cash. So we are just trying to find out different means how we can digitize the entire journey for a consumer. So instead of collecting cash at the doorstep, you can simply present your handheld device, which you can tap on that handheld device and make the payment easily. That is it. Some of the customers who are using our technology, and we would like to hear more from all of you. Yeah. Sorry, we have one question, if I can take. Yeah. Sorry, go ahead. Yeah. I think it's more related to the company, ma'am. We may not be able to comment what happened exactly, but it's about the management of a company, right? So as I mentioned, there is no right and wrong. You have the technology available. You have it for offering it to your customers. It is the people who are running it and how good or bad the people. That's the entire essence of it. But you won't be able to comment what happened with Viabat. Yeah.
Hi.
Yeah, sorry.
Hi. So we spoke about disruptions, we spoke about customer experiences, we spoke about new technologies that's happening today. My question to you is there a possibility of payment gateways becoming acquirers or issuers at any point in time? Like you?
That's a very good question. And as I mentioned, the answer lies with the regulation. Mm-hmm. So when you see and when we offer and we design products, it is to make sure that we are not violating any regulation of that particular market. So there are companies that will do a forward integration and become the acquirer themselves. Like you would have heard about name Stripe or Adyen, who has the payment gateway and also have a license. So you essentially need to have a right set of licenses from the regulator to operate or become an acquirer. Whereas from a Mastercard point of view, we are agnostic and we just provide the technology, whether it is linked for the issuance of a card or the acceptance of a card. So our interest is to provide solutions which benefits the industry, not the Mastercard by itself. That obviously helps our market cap and our valuation by default. But then all our member banks who have trust, and the history, as C. Anurag was saying, was when Mastercard was formed, it was a consortium of banks which started the entire, and that's the philosophy that we still continue to follow. So we don't compete with the banks. We give them the solution to enable in the market, and we have a fruitful partnership not only with banks but also with merchants and other financial institutions.
Presently, you do that, but maybe in the future.
No, I think that's, if that changes, then obviously the market will come to know. But at the moment, as I mentioned, we just bring the technology for our partners, and then they're there to adopt it.
So one more question, if I'm permitted.
Yeah.
Tap on phone. You know, people talk about risks in India.
Yeah.
So if you're carrying your phone and you're carrying it in your back pocket, and there are some frauds that have happened. Is that true, and how does that work? With all the security features that we spoke about.
Yeah, so we didn't have time to go into some of the concepts called liability shifts. So when I spoke about technology like EMV 3DS or a tokenization, from the payment schemes and from central bank's point of view, there are certain risks that would be accepted by the issuer. So yes, you're right, there could be instances where, people are tapping, but then that value is very, very small and insignificant for an issuer to accept as a risk. And then behind, it's not like every transaction I can process as a contactless. There is a logic built that after third transaction or after fifth transaction, I will go online and check for the balance. It is not like I can just do continuous 100 transactions and the cardholder will not come to know. So that's the logic that we define, that one transaction may be exposed, but then the second transaction we know how it's been covered and how, as I said, the technology is tracking every IP address of that transaction, how and where it was originated, and what is the frequency of the transaction being repeated. So if the models are able to collect that information and give you a view that it's probably a safe transaction, you will continue to process, or else there will be alert generated. Thank you.
Thank you very much, Mohit, for taking us through the key developments in payments method. Adoption of these new methods has become essential tool to combat the competition. Like you said, your biggest competitor is cash, but it seems Google, Samsung, they are going to be biggest competitor. Let us have a big round of applause.
The Google and Apple Pay, they are, as I said, if you use Apple Pay, you will still see one of the cards being linked. So again, they're not a competition, they're just the enablers, and we support those payment instruments through our technology.
What about Paytm?
Yeah, so that's again, so very soon, you will see, we are working with all these proprietary card wallets or payment instruments where we will also enable them. I spoke about the open banking as a concept where we are also linking direct bank account payments, which is much more cheaper. So we are not here to fight with the digitization. We are in favor of digitization. Anything which is helping us to have that, from a technology point of view, we will be there to provide a solution.
That's really great. So I would like to invite our chairman, vice chairman, and to present a memento to Mr. Mohit.
Thank you. Thank you. Yeah.
Ladies and gentlemen, we have reached to the last part of the session, which is vote of thanks. Like I said, tickets and passes after VOT. वो भी बहुत मेहनत करके लिख के लाता है अमित खेतान. So I would like to invite our ex-com member, C. Amit Khetan, for a formal vote of thanks. To the stage, please. Thank you.
Good afternoon, members. And thank you, CA Manoj Agrawal, for giving me the opportunity for the word of thanks. I mean, this is one of my favorite role allocation during an event. And thanks for another reason for giving the reasons to members to stay. I mean, I know that you are all staying to collect the tickets, but I just want to say that, I mean, when we are spending the 3 hours for an event, so which we should stay for more 3 minutes, because it's not making a big difference, because it's the express of our gratitude towards the sponsors and towards the speakers. And as I always believe, to make a interesting word of thanks rather than making a monotonous. So, I mean, you know, we all love the flowers, right? The beautiful flowers, the colorful flowers. So which kind of the flower we admire most, we like most? Any answer? Which kind of the flower? Rose, yes. Yes. So the gist of this, the lily, why the rose and lily? Because these are the beautiful flowers with the good fragrance, with the nice smell, right? So all these, our events, the venues are like those colorful flowers. But the participating members, you attending the members, you are feeling the fragrance in these events. So thank you so much for making this event successful with your participation. And you know, there are some magical hands, the experts' hands. If they gather all the flowers together, they can turn into all these flowers in a bouquet. So thanks to all our speakers, the eminent speakers of today's session, for, you know, gathering all these flowers, I mean, in form of our members, Mohit Are, Mr. Manish Mathur, and Mr. Viram Shah, and Ms. Deepika Sitlani. And you know, to afford these flower bouquet and expense, you always need the funds, right? So thanks to all our sponsors. I would like to our sponsor who's always supporting us. Thanks to the title sponsor, Saudi German Hospital, principal sponsors, Pan Emirates, Tally, Lulu, IFCO, and AGMC. Our platinum sponsors, Emirates Chartered Accountants, UHY James, WMS, CloudSook, and Vested. Thanks to our FMCG partner Agathia, media partner Khalis Times, institutional partner Delhi Private Schools, banking partner Bank of Baroda. And I would like to thank our dynamic chairman, C. Anurag Chaturvedi, and my colleagues in the managing committee for always supporting and putting their hard efforts to organizing these events. And thanks to our trusted photographer, I cannot see him, but yes, and the Kaji and team for arrangement in the event. Until we see each other in the next event, in the Dandiya event, the Ibadat, I see Amit Khetan signing off. Thank you so much. Have a great day and great evening ahead. Thank you so much.